Okay, let's do this thing. What am I doing? Let's take a look here. Well, let's just get this chart set up. Good morning. Good morning. Got some laundry machine noise in the background, so I might speak a little louder as I turn my gain down a little bit. Once that stops, I'll fix the microphone. I'm going to try to speak loudly and closely to the mic as I turn down the overall volume. There's a lot we could go through today. So this breakdown just went. I mean, there's not really anything else to say about it. I'm kind of waiting to see on GME what happens next. I'm going to talk a little bit about another video I watched this morning. I got mostly through it, and then I want to get to AMC. So more downside. Well, GME made a decision, right? So like it's not like it's over. Technically, you just passed through the bottom, but this would be considered, I suppose, if this were like a redistribution, this level at like 20.05, the one that we marked off yesterday, would be considered like the ice, quote unquote. So what the ice is it's like a temporary, well, I wouldn't say it's temporary, but it's like it's an LPS basically, like it's a last point of support. So that's an easy one to identify on this because it was support like 3 times essentially, like we were pushing from that level. So like naturally, if your sellers take over, they're going to try to like dump beneath there. So there's nothing about that move yesterday that was really surprising. Like we had talked about potentially going down many times, but I was very optimistic, right? And in this case, my instincts were wrong. So like I was instinctually thinking we may not go down and fill that gap, and we could still be in that situation, but it would have to like basically rocket back up above $20 today and just keep going. I mean, and it's not like unheard of. It's just not likely, right? Like at this point, your breakdown here at this diamond structure would more than likely indicate that you're going to head to the next available creek. And then additionally, like we know that the target for GME was basically the gap fill. So it's not really a complicated question at all at this point. You're just like, well, whether it gets there or not, it's just a stone's throw away at this point. So who really cares? So, I mean, my initial thought was that we may not go for the gap. We might get like an LPS up here and not drop through what, again, I just referred to as like the ice level, which is right around 1997. Those are things that, look, like we could go back and forth about how that breakdown happened. I think it's pretty straightforward. I mean, we talked about the failure to advance here. This is basically just a cat ear structure then. In theory, it could be a lot less dramatic than we think, because technically, like this could be like a midpoint, and again, we might hit like 18.15 and then just reverse. We may not get the full gap fill still. So I don't want to talk out of turn. The market's open now, but it's like so close, and you're just kind of like, who cares at this point? No offense to people who are really married to the GME movement, but it's just kind of like, I'm at the point where I'm like, well, clearly I was wrong about an LPS. So that ship has sailed. It didn't happen. You had the breakdown. So now you've got 2 targets. One maybe a more, simple like $18 target. The other one probably down to the gap fill. It still could be a bottom. Like I don't want to make people think it can't be, because it could be, but you have to wait. We'd have to wait and see what happens. At this point, we really want to get back over like the $20 level. I mean, if it came back above 20, you've got a decent chance that you could be on a reversal. And we talked about this idea of like and it didn't happen this way, but we talked about this idea of like it's called a terminal shakeout, where you have like a nosedive and then it reverses back up above. Those are things that I don't like giving a lot of credit. Like, if that makes sense, like, I don't want to like make people think that that's really likely. It doesn't happen that often, but sure, like we've talked about this model like frequently, and you know, the end result of this could be just full on distribution, but there are times where when you get to this particular point, if it's still going to go back to the upside, if you're still going to get a reversal, this is where it would happen, right? And you would basically walk back out these levels. I've mentioned this so many times at this point that hopefully you guys are aware this is a possibility. And in our case, it looks basically like this. So does this match bottom structures that we've seen on AMC and GME before? Yeah, it does. But it's all predicated on this move. Like, it has to come back up. So it's one of those things where it's like, I'm not saying who cares, like it doesn't matter to people, but it's kind of like at this point, you're so close to the gap fill that if it went down and filled the gap, I would be more inclined to say we would sit low, but it almost doesn't really matter because you wouldn't have confirmation either way until you come pass over this outer creek. So that's kind of the way I drew it out here. We can get rid of these other situations that didn't happen. That's fine. But basically it would be like you hit the bottom at some point, and it's not that far off. It's definitely not what happened, but something like that, right? And it'd have to be that kind of a move in order to get you back to the upside. And if you don't, what may happen in that case, I guess, is that you could see it reverse and then just flat out what we call like a hook, right? You would get like a secondary distribution, like a redistribution, and it would be called an LSPY, where you basically have a last point of supply where you come back up and you dump shares again near 20. So it could be like shorts covering and then re-entering. And those kinds of situations are, again, they're hard to read because, and we've mentioned this before, and I don't take this lightly. I think it's a problem of mine. I need to work on this because when you go read up on like Wyckoff in general, I think it's a really powerful system. I do. But there's some problems in the system. And one of the problems is that a redistribution looks a lot like accumulation. And a reaccumulation looks a lot like distribution. And the only real difference between the two is volume. And like, that's it. And if you go to like any of your Wyckoff websites that talk about this, they all basically say the same thing, that you really just have to pay attention to volume in the range and be good at deciphering that. And so I want to say, like, first off, I think that's a big growth area for me. Like, I need to continue to grow in that area because especially in the case of like AMC during this range, I've been so flip-floppy and I couldn't quite put my finger on why. I was like, why am I so confused by this price action in this range? And it's mostly because of the volume profile. Like, not being sure what the heck we're seeing with the volume. These are high volume moves compared to like the averages, right? They are, but just because you have a high volume move up does not mean it's buying like in the traditional sense for accumulation. It could just be shorts covering. And the difficulty about a redistribution versus an accumulation is that there's not really like a distinctive difference between the two until you start looking at volume profiles and ultimately like where is the stopping power, I guess. One of the things that's really bothered me about this range is that it appears to me to be like an ascending accumulation, but these pullbacks have been so deep that it makes me wonder if what we're really seeing is basically short covering, you know? And I know that might seem odd to folks, but that's what an LSPY is. It's like a low volume area. You see these sudden spikes to the upside, and then there's very little follow through, you know? And to that extent, how could you say like, well, then what was this? Was this an SOS with a backup? That's what you were saying could have been yesterday. That's the problem. That's the big problem with, I think, with a redistribution versus accumulation, is they look really similar. And to be honest, I don't feel like at my skill level right now that I'm adequately telling the difference, which is why I get to these ranges and I'm like, I really don't know for sure. And I think in part, that's probably part of the game, is that you want to keep retail kind of confused. But I've seen plenty of examples, like I'm going to look at the bigger picture here on like the 1 hour. I've seen plenty of examples like this where it looks bad and then, suddenly it just rips and you end up going back to the upside. But there's also been plenty of examples like this where it's just straight up a bear flag. I mean, and you can look at this however you want to, but at the end of the day, like if this breaks down, it really just looks like a bear flag. And it looks to me like there's not been any real stopping power. Like it made me nervous on Tuesday. And I'm not just saying this because we're down, okay? I'm just saying this on the whole, like this is the cautionary tale, right? That I've been trying to kind of get across all week. And I guess I couldn't put my finger on it. Like why was this so difficult for me to describe? And why have I felt like every other day I'm like flip-flopping? And it's really this concept of redistribution versus accumulation. And we looked at those schematics on this stream a while back, and they are very, very similar. And if you're just using the schematics, you're not going to get the answer. You have to have the proper interpretation. And I just think it's a weakness for me. Like, I mean, it's straightforward. I don't think I'm very proficient at it yet in telling the difference between the two, and knowing whether this is just shorts covering versus a buy-in, and what really bugs me about it is that an ascending accumulation will do very similar motions as a redistribution, because you'll have like these buy-ups that are pretty strong, and then the operators will just like let it go, and then they'll see it happen again, right? Like the next day or whatever. And then the operators will just let it go. But the problem here isn't that that's not happening. The problem is like what happens after. Because normally, and this is where I've been getting confused, right? Because normally in that kind of a situation, these creeks are really well defined and you come back and you check them and you don't break them. But in our case, we're not really doing that. We're like going way back up, but we're not really, if I'm being honest, I don't think we're going back. This one's an exception, but this one did not. I mean, there's no way around it. Like, it did not come all the way back down, in my opinion, to a creek. I mean, this creek is clearly like steeper than the previous one. So if you're looking at the two and you're trying to make a comparison, you might even say here that this really wasn't the best retest of it. It just caught high and it's making a higher low. It didn't really come all the way down, but it's close enough that I'd be like, sure. But this one's like way off. Like, it's nowhere close to it, And there's no way to slice it and make it look right. I mean, you can go down to lower time frames. There's not really any support here to speak of as like, oh yeah, that was creek support, So it throws me off, because if this were an SOS, this should have been an established creek support here that was higher. Does that make sense? Like, we should have seen some kind of a backup here. And I say should have, like I'm in control and I want to see things a certain way. I'm just saying, like, it makes it easier, right? Because then you could have been like, sure, that's where the creek's at now. But we didn't do that. We just kind of raced up, quickly ran to the top. And that puts you in a pickle, because if you're in a situation where your creeks have been setting up really low, now you have this problem, really like GME does. We just saw it happen, where you can't come back below 446. That would be considered, again, like the ice level. So we were just looking at this on GME, and I know it's been kind of confusing because they seem like they're kind of moving together, but they're kind of not. AMC's higher. But if you look at the overall bottom level here, like, where did we find support before we dipped low? And then how did we find support coming out? It's basically this little pocket between 446 and perhaps a little bit lower at 440. And to me, like, when you look back at Wyckoff theory in general, that's what we would call like an ice level. So it's a level of temporary support, an LPS support. And if you break that after making like a high in the range, that's where the slide starts. So while I can't tell you, because I don't feel like I'm proficient enough at it right now, I can't tell you whether this is overall going to break up or down. I can say that these motions to the upside, they have not held the levels that they need to hold. Specifically, like that 482 level has been tested and broken and tested and broken, and we had one glimpse of hope here, and then there was no follow through on it. So some people are going to say, hey man, it's just the options chain, it's in control of everything, they're just trying to pin us at 450. Okay, that's fine, but where does that put us on the big picture, right? Well, it puts us on another trend breakdown. It puts us on this flag breakdown. That's what it does. So if we were to go sideways down to 450 this day, right, and we end up down here, where does that put us? I mean, it puts us below another trend. It puts us on essentially like a breakdown level. I mean, there's all kinds of things here that would be problematic, you know, from a just a basic trading perspective, like, oh, it broke down out of a flag. Redistribution schematic, you're basically sitting on the ice level, you know, at the end of the week, where the next week all it takes is a little nudge and you're just going to slide really far. And that idea of ice is like once you break the ice, you just drop, you know. And that's where it is. So like we just saw that with GME, like right when it broke the ice, it just slid. And I'm talking about still like, oh, well, there's still potential for like some kind of weird redistribution to happen. That's just a hook, you know, that's just an LSPY. That happens sometimes after you quote unquote break the ice. You might come back up and have a little bit of a rally, and it might seem like you're going to go, and then you don't, you know. And the situation is distinctly different from like a spring where you would come above this $20 level, which would be in contention, and then you would continue to break creeks in an advancement, and distinctly different, right? So the problem right now for AMC, if I were going to mark off just one level to say, here's where you need to stay, I would pick 446. That's the only level I think that right now could give me any kind of clarity on movement forward, because I think if we broke that level down, I think we're just going to drop. I really do. I don't think that at that point, and it just so happens, yeah, like on the 1 hour, like that's where one of your EMAs is. You know, and there's the 414, we kept coming up with that target. That's basically where the 180 is on the 1 hour. That's probably not surprising to anybody that it's also laying on that other trend. So it's not like, when I say breakdown, it's not like, oh, it's going to just indefinitely go down. It's more like, well, you have a high probability of continuation to the downside at that point, at least down to 414, and then possibly much further. So, yeah, Pine Wizard. Well, so we got a red 9 here is what it looks like. So this was this is kind of what we've been talking about though, right? It's like this looked like the opportunity to advance. I don't want to go through like 100% this concept of redistribution versus accumulation again, but I would very, very much encourage you guys to go check out the schematics of redistribution versus accumulation, and you'll see how very, very close they are. And what you're relying on is not the schematic. You'd have to rely on volume, and the volume here to me is not simple. Like, we could make the argument it's making higher lows, but a redistribution will do that as well. So that can't be the only argument. So you can make the argument these are high buy-ins, but a redistribution has large spikes to the top, which is basically just shorts covering from like positions that were opened and then re-entering. And then when you look at the volume on the pullbacks, they're making really, really steep drops on basically no effort. Like there's just no stopping power. That's my big thing. You know, and ever since Tuesday, but you know, it's just been like this nagging feeling that like there's something off. Maybe it's just because of the lack of stopping power, but that particular move right here really bothered me. It looked like an up thrust to me, and then there was very little effort put into the downside, and even less so, I would say, yesterday. I mean, you look at the volume to the upside here versus the downside, it's like there's no, I don't know. I know like one person might look at that and say, well, maybe that's just sellers evaporating. Maybe, maybe, or they're just trying to pin it, this week, and they don't want to overdo it. But I also see this as like effort. And so the effort moving to the upside, this is a high amount of volume going up. And then look how very little by comparison it took to push it back down. And the volume on these bottoms, coming off the bottoms has been okay, but the very bottoms have been pretty dry, really shallow volume. And it's just kind of backwards, You want to see the higher volume kind of buy-ins. You don't really want to see these ramps that just kind of evaporate typically. And the exception being what I was talking about earlier, which is that ascending accumulation. And that's why I think this range has been really frustrating for me, because on the one hand, we are making higher lows, and that seems like a really positive sign. On the other hand, it's like, well, a redistribution looks a lot like a bear flag, and arguably we've got a bit of a widening spread here. It's definitely like a trend. I think more like a flag. So as we're moving up, we're also pushing up our breakout level, like we're having to now go a lot higher to prove this as accumulation every step of the way. And at this point, we really would have to go all the way up to like 550. I mean, I know I keep raising that floor, but that's because we keep retreating. We're not holding any support levels that ultimately matter. And we're really close at this point to that ice, which is at 446, which would drop you low. So what a lot of people might see here is that, again, that higher low, lower high kind of thing, or higher low, higher high kind of thing, like we're moving up. But all I could tell you right now is just read up on a redistribution, and you'll see what I'm saying. Like there's a problematic kind of view, or there's a problematic question between accumulation and redistribution, and it comes down to volume and volatility often. And we've gotten really highly volatile in this range. So on the bigger picture, I do think that this looks like a hook to me. So I don't have it drawn out here, but you can see on this particular diagram, it looks like we've broken one of those fans. You can see the effort made to recover here from that breakdown. That's where we got that red 9 over here on the 1 hour. We're hovering above that 90 EMA, which would be like a 30-minute 180. And we seem to test below here, and now we've pushed up, and now we're right beneath it. It definitely looks like a potential hook. So much like what we were talking about previously, it's like, well, crap. The press down has been successful in breaking that trend that we really wanted to hold. So at this point, there's a lot of questions in my mind about direction. And I do think that, ultimately, like pushing below 446, I'm almost positive is going to result in a move down to 414 almost immediately. So it'll be a pretty steep drop. That's like 40 cents, 30 cents or whatever, if that were to happen. So I'm going to watch this really carefully. My thought for today is that we're going to have a typical like Friday, probably going to end up with some chop back down to 450. I'd be really happy if it didn't do that and we had some kind of crazy reversal, but reality is reality. And frankly, like I can't do anything but read the chart anyways. I can't predict the unpredictable at that point. So it is what it is. We're seeing kind of general green, at least on the stocks that I follow. GME, there's a chance that it doesn't go down, completely fill the gap, but the gap's really close. It's at 1750, so it's really close. In order to see a reversal, you'd have to come all the way back over 20 at this point with some serious movement, volume, support. etc., that would be an efficient bear trap. Otherwise, it's just a distribution. It's broken down and it's going to continue down. And then AMC's in a lot of the same situation. Like you can see we're failing to advance again. And I know it's only been like 20 minutes, but we're now once again beneath that 483 marker. I'm so tired of talking about it, but it's still there. So there's not much we can do. And frankly, like that price action yesterday just was really crappy. Like we watched it happen. We watched it break down on the top. And I was like, well, unfortunately, there's not really much you can do about it. Once it happens, you're like, well, okay, you're going to head back down. And went really far. He dropped like, 10% or something. We knew the decision point was coming up, and it had that little micro hook at like 505, and then that was it. It just didn't recover. So it ended up being a lot like this kind of red scenario that we played out in our minds yesterday, and I was saying like it could be like this situation where you fail to advance here, and then you drive the price back down. They're using this as a sort of support for now. I would be very cautious if it broke down. And I know some folks are going to say, well, it could just gap up Monday and da-da-da-da, and sure. I mean, everything is possible in the market. I wouldn't say, again, it's completely done unless it dropped beneath 446. It could also gap down, you know what I mean? Not just gap up. You could have that move happen in extended hours and just be ready to go. So it's a dangerous position to be in on a Friday going into a 4-day weekend. And that's probably by design. As in, that's the way it's been manufactured. I watched a really good video, and I wanted to just talk about this really quick because why are you always so bearish? Well, I'm not. Pretty sure that while everybody was being really bearish back here, I was really bullish, and I benefited from that. So be careful with universals like always. I'm not. I'm always cautious. Yeah, you're messing with me and it's working. So congratulations, you succeeded. I'm always very cautious, right? I'm cautious about potential downside because I think that as a trader, you need to know where those breakdown levels are. It seems like the washing machine stopped, so I'm going to fix my volume real quick so I don't have to scream. What would a return to the upside be? Honestly, at this point, I'm not even sure like how to qualify this anymore, because I suppose a return to the upside would be coming way back above 530. That was another one of those levels that we talked about. But really, it would have to be this breakout of this uptrend at this point. Yeah, you can stay in an uptrend for a really long time, but it could always end up resulting in a flag action. So at the end of the day, if you want to really see this move, I think we need to be back up here at like 540 something. And even then, I'd be nervous because of how this has shown very little stopping power in holding supports. There's just no buyers. The volume got sucked out as soon as this was done, and that makes me feel like more like a redistribution as opposed to accumulation, because it just doesn't make sense. If buyers wanted to advance the stock, there's no reason to cater to the market maker in this particular range right now. Like, it just doesn't make sense to me. Unless there's like a lower target in mind and we're going to head lower again. So on RSI, I noticed this is a very similar kind of thing where you have a widening spread, and this is where I'm kind of getting out with the widening spread. It does look like, kind of cat ears that are rising. It seems to me that it's kind of broken down, but I know that, it's not, it's just one time frame. I'm on the hourly, and it seems like it's struggling to kind of hold support here. It's kind of turned back down to the downside. Technically, that is a hidden divergence. So if you make a higher high and the RSI is coming down, that's called a hidden divergence. So like on the 1 hour, there's a really small one. It's only a couple days long. So don't take it as like, it could just be a breakdown, right? That happens too, you know, when you make a lower low. But that is a hidden divergence. So, I mean, that's something. But this to me is like a widening. And if you know anything about that, it's a lot like a flag. You know, if you were to break down, you'd have continuation of the trend. If you break back up, it's a reversal pattern, but you have to go pretty far to kind of break that pattern, especially on RSI at this point. So it's debatable, you know, in terms of like, would you ever really break that? Maybe not. It'd have to be a pretty significant move at this point, because this is clearly gone up really high on the 1 hour. This is almost 100. It's like 96. But secondary move here may not get much above 70, which doesn't really say much about this pattern. So it's kind of, I want to say it's a useless pattern, but it's definitely there. So that tells me that there's an increase in amplitude of buying and selling, like the degrees at which we're moving are increasing, the involvement's increasing, all that jazz. And I think that's fairly self-evident in this range. Like it looks like there's a slight increase in volume on these peaks. So why do you use why do you use blank on the 1 hour? Hang on a second. I can't read that. I'm going to just bump it real quick. Why do you use RSI on the 1 hour? Why not? What's wrong with using an indicator on a different time frame? I don't understand that question. Are you asking from like an educational standpoint? Or are you saying that I shouldn't be doing that? Because RSI is useful on every time frame if you know how to read it in context. So I'm reading it in relationship to the price breakdowns and all the stuff we're seeing right here. Like this to me is a pretty clearly evident widening on the 1 hour. We could go to like the 4 hour, but that's not really any different. It's still a widening. You know, the 4 hour looks a lot worse, if I were to be honest. It looks more like it broke already kind of thing. It might be a little less of a widening, more of just a channel, but it's still widening slightly. And unfortunately, and we were talking about this on the GME RSI up to 4 hour, that there was seemed to be a need to come back and meet the moving average. So much like what we see on most of these kind of cat ear structures, you've got like one of two possibilities going into the end. In order for us to see a reversal, and I think this would correlate to price action reversal, you would expect to see it come back above here and then advance back to the top and then go really straightforward, right? Because if this was like a bottom, that would be your expectation, that this would jump and basically head over the next available creek, which is like right there, which also jumps back through this trend roughly. You know, it's not going to be perfect on RSI. And then it makes a new high right here. These are things that you would expect to have happen. And then probably during all of that, you would see again, just kind of being a little bit maybe too straightforward on that, because I don't know exactly what it would look like. But it would be something like this. But that would be your moving average. You'd be going above it and finding some support above the moving average, which is typically more of a bullish cross. So I don't think either of these is invalid. And I think you can derive a lot from RSI. RSI is a really good indication of breakout, just like anything else, but it's a lagging indicator. So it's directly related to your price action. It's not always super predictable. Like it can't help you necessarily determine what's coming in the future. But I use it as like I think it's a great volumetric study tool. And seeing how volume is relating to price action, this is kind of one of those things that I view as like a missing piece. if that makes sense. So I'm not discriminatory with it. I think you can use it on any time frame, and it gives you information, you know. So here we saw that divergence was happening on the RSI, and it was happening on a greater extent as well, and that led up to that big run. This video that I was about to share with y'all was a study into Opex, and it's very similar. It's interesting because he says he did not do in TA. People frequently say that when they talk about options, but I don't know why we don't consider options study and cycle analysis and all that jazz with options. I don't know why that wouldn't be considered technical analysis, because you're analyzing a data, you know. But I think maybe it's not charting. So people think, oh, it's not charting, so it's not TA. I don't know where that comes from, but that's not how I define TA. I think TA is everything, you know, related to the movement of the stock price. That's not fundamentals, basically. I really do. I think it almost all falls in the same category. So like I would look at this on the 1 hour and I would say, yeah, it seems like it might be holding that trend, and we could check it on the 4 hour, similar time frame, and just see if that's holding. And it looks different here. But it's directly relating also to, notice these lines that I've drawn from top to bottom here. It's really similar actually. It's probably like the same concept. So if I'm looking at that, would you say it's broken already on the 4 hour? You'd say it's really darn close, you know? So it's correlating really well to this particular marker. Even though, notice that like that goes above, it doesn't actually go below this lower price. And that's another thing that we would have to kind of address going forward is like, if we were to drop, you know, 414 seemed like it was on the table for some reason. There's a lot of targets that go right there. Maybe it's some kind of a retracement level on like a bigger picture. There's this other really low trend we haven't really talked about, that could be a catch, and that's like basically from bottom to bottom over here, and that's another possible place that we could come to rest in the future if we do see continuation downward. You know, if we get this drop and we don't hold the next support level, I would imagine it would be kind of some chop mid next week and then go down again. If we don't get that reversal, it's pretty straightforward. What about the analysis that I did on the comparison between this and January? Well, there's the kicker, right? It's like there is this analysis that I did, and in that analysis, this blue line indicates when you should expect some kind of a potential turn. And really, even though it was a waveform that I was defining back in that analysis, that was I'm not seeing any signals, regular trading 4 hours with this indicator of a potentially big turn, not from the Pine Wizard. But that was I don't even think it's on here. No, it is. Never mind. Sorry. I need to stop like saying stuff like that and having to like take it right back. I get very stream of conscience when I'm streaming, but I often say things and then take it right back because I'm like, oh, no, just me thinking. So this is the only maybe, and I hate hopium so much at this point, for everybody's sake, but there was a direct comparison we made. This is not working out in that regard. Like you can see that trend right here. That's where we landed. You can see it's kind of generating an S-curve right around it right now. And that was one of the ones that you do see break and support above back in January, and that just hasn't happened. Like it's been very low and suppressed. You may make the argument, well, maybe the reason it's low is just because it's set up lower, and so it's just setting up low, and then this is the move, you know, whatever. But I would say that blue marker, and as precisely as I could make it, if you want to be really technical about the timing and you think it's going to be exactly 1-to-1, based on proportion, and that's what this is based on, not time, because time is not the same. Proportion is like one size relationship to another. So that's the distance between the bottom and this curve in the middle, bottom and the curve in the middle. It's not actually the same amount of time. That would have you breaking Tuesday. You know, essentially this broke out on a Monday back in February, and then Tuesday started running. But here it's like, you can also see that there's a correlation to that fib time. And I don't put a lot of emphasis on that, but we did the entire sine wave based on that fib, and it works pretty darn well. So I do think that there's a reasonable probability that could matter. But again, does it matter to the upside or the downside? I think that's defined more by the range, not by some previous example. So I don't think that these are things that you take. Personally, I don't believe they're things you take and you take them to the bank. I think they're things you observe and you say, well, there are similarities, and so you take the similarities that matter the most, and then the rest of it you kind of say it could happen, but it's dependent, I think, on the range. I don't think it's dependent on a previous example. That's a really important distinction to make. So this was like 48 days also, so it's like 24 days, a really even measurement here, because the first two fibs are basically the same, the first three essentially, and then from there you start working out, and that just has to do with how fibs are calculated. But in this case they were really indicative of top, bottom, top, you know. So if we were to look at it that way, it could be, you know, top, bottom, top, and you wouldn't expect to go back up until early June. If we get an S curve, if this breaks through the ice and has an LSPY and then drops like $4, you're going to end up sliding down. This is a very different situation, because then I really don't think it's unreasonable at that point to not expect it to come down to, or to expect it to come, not, sorry, I said that backwards. I don't think it's unreasonable then to expect it to come down and retest kind of like your major creek down here around 3. And I think that's kind of where we would be at with a gap fill, like 294 would be enough to get you back down to that creek. And that would be painful. I think it would be quite a bit of downside over probably a week or two. I don't feel like it'd be very likely that just kind of drops straight down and then returns. Mainly because you can see it took time, you know, to build this out. And we'd expect at least another few days of that, plus some, maybe at the bottom. And yes, that would be very different than what happened in January. It also would be very different potentially than what happened in March. So the other thing that, you know, with those comparisons that we did is I didn't really do a direct one-to-one with March. But March has a very similar move. It just happens at a slightly different place. And it does have an ascending channel that widens. It's very similar. You know, and I didn't really go into any kind of one-to-one there. It's not as one-to-one. There's some things that are very, very similar, some things that are very, very different, just like with January. One thing that's not really similar by comparison is a lot of these trends. They don't really match up like they do with the January one. Like these guys are pretty succinct with January. I'm not really finding that that's the case. It's also a difficult one to define because even though it looks very similar, and if you look at it on a fractal basis, it's pretty darn similar. It's a bit difficult to identify because the bottoming area right here specifically builds out a bit differently. And so finding those like bottom anchors is kind of tough. But I think that basically like this would be sort of like the similar comparison here to like the outer trend. I know it's more of like an arc. And then there's another one that's like right here as well. But neither of those really makes a lot of sense of everything else because like, again, it doesn't set up the same way. It just doesn't. So I'm on a 4 hour, so you can't see the EMAs comparing. This is a 1 hour chart. But this is ultimately like what I meant by when you look at what happened previously, like this was an advancement that bounced. It also had a widening spread, as you can see pretty clearly. I mean, there's not, and what's weird is there's not even really like a strong breakdown of that trend, but the price does continue downward. You know, we're talking about RSI right now, but there is a widening here on the 4 hour. And it happens right before it starts sort of listing back down. And that particular area is of concern to me right now, this guy. And I do think there's market similarities. I don't think that they're exactly the same. Ultimately, when did this break down? Well, I mean, when it went through that ice level, that's where it got the hook. And it ultimately like broke. So it's the same. So in that regard, I think the 446 is still key and pivotal, but a very similar kind of rising advancement. You know, maybe you could argue that this wasn't on the same kind of a trend. I think that's a possible argument you could make. Maybe you could argue that it's, you know, it's different because of that. And yeah, I don't think there's anything wrong with that. But I would say like our current time, it seems like we're more above it than below it, which is good. I think that's a positive. And I actually don't really know how you'd even draw this trend. Maybe like that. It probably goes back to the same point. Like early on here. Yeah, roughly. So similar in that regard, I suppose. Yeah, comparing it to like a breakout level makes some sense here. You can see there's like a push to try to advance against it right there. That's where the gap was. And then there's a push to try to advance it. So something like that would be like your drop and push. This is different because this never came back lower. I mean, we talked about this in the comparison to January. I think this is the last point, not this. I think this would have been like a downside. And then this is where you make your final high. So it's more of an LPS type situation than a spring situation. And that makes it very different looking. But this essentially is like, in my opinion, the same point. And this is the buy-in, bounce, and then the rise, the buy-in, bounce, and then the rise. So I do think there's a lot of similarity here. This is where you advance, and then this is where you kind of come back to rest right there. And then in relation to like where that is, that's where things get kind of tricky. It's kind of like, I'm not really sure that there should be a comparison, first of all. But if there was, you might say it's pretty similar. I mean, that's still like right on the mark. So it's a very similar situation. I mean, it's not identical. It's not one-to-one. But it'd be hard to say like that's not very similar. I think it's setting up higher. I think it's setting up on the upper half. Like I mentioned a minute ago, it seems a little bit stronger, like it's setting up on a higher portion here, as opposed to this, which was really setting up right inside and technically below. You can see that that first move right there actually hits that perfectly, and then when it jumps over it again, it doesn't advance. We saw sort of something like that, but it's not quite that simple. So AMC is up at 480 right now, so it's going back to that level. I need this price right here. Hang on. I forgot what that was. That move up to, it looks like 476. That can't be right. 511. That was the level. I should know that. Yeah, so that's that marker right there. It's that high. So that was 510. So that pushed up to 511, and then it pushed up higher. So there's like double up thrust for sure. Like there's a double check on that top for sure. I don't know why I didn't even look at that yesterday. Should have looked at that. It's really important. So if you were looking at that and you were comparing it to what happened here, you would say that's pretty darn similar, I would think. And I know it's not the top, so you might say, well, that didn't even reach the top. But it's where is it camped? That's like the question. It's camping right there. So that looks like, it's like which supply is it going over is kind of irrelevant. It's just more of like where is it? Where's the level, period. It looks like 101.31. Yeah, I think there's an attempt here to replicate something like this move in the present time frame. And I think you're seeing the 101.31, and this had a high of 101.25. This actually didn't breach it, but the second move did. So you see the similarities between the two? Like, they're not one-to-one. There's some differences. And again, maybe those differences could be argued as like, you know, valid points that this might not be the same, because, you know, I could look at this and say, well, obviously the volume buy up here, maybe you could compare that, but then the second volume buy up in this area was really weak. It's about equal to what you see in selling, and this looks much stronger, much more volume on that second buy up. We're looking at these in different time frames, so that's not really helping anybody. I should probably look at it on the same time frame. So right now we're going back up. We're once again kind of checking that 430 level, or that 482 level. Looks to me like we've hit it. And for now, we're not advancing. We'll see what happens. A rejection here would be a lot like what happened during a rejection here that we had on Tuesday. I would imagine a rejection here would send you back down probably towards 450. It's kind of a rinse and repeat. That might be the model that they're using to kind of throw people off, but it could just be that that's what happens too. So, you know, things do often rhyme in the market. Now I've got to go backwards. So I'm going to watch 481, 482, but I would imagine there'd be a decent little wall there. So enough about the downside, I guess. While I'm looking for that, I'll talk a little bit about upside, but I'm not as confident about that. So you have to get over 485 again. That's a given. You'd have to come back over 510 again. That's kind of a given. Those two markers are really important. At this point in time, in order to see a breakout, you really have to come above this flag. I don't think it's avoidable in order to confirm a breakout. A flag like this is very unusual to break to the upside, and you would have to wait until basically this gap fills at 550. So it's a pretty steep drive here, you know, and every day has been like that lately, where we've kind of woke up and it's been like this big push and then chills out and then sells off or whatever. I mean, we've had a lot of these kind of motions of possibility. So maybe early in the day today, if you were to see something like that, that could indicate a positive sign. It's a big move. That's a 15% move. That would be really significant from where we are now, not on the whole day. Anyways. And I want to talk a little bit about this video that I watched. I think it's a good watch. I'm not usually big on recommending videos. It came up on my feed and I was like, oh, I'm going to give this a try. I've never seen this guy. And I was really impressed. I loved that he did research, and he has good research. I posted it in the Discord group already. It's about 20 minutes. And if you're interested in options chain, Opex stuff as it relates to AMC and GME, I think it's a really strong, watch. I think it's a really good one to watch. I'm not too concerned that these aren't perfect. So if you're looking at it like, why are your lines not right on the money? I don't really care. It's more of just, that's where it sort of is. I'm not going to sit here and like, I know exactly that's where the creek is. We know that, like, it's where the support is, right? So it doesn't need to be 100% in order to basically be right, and get this similar idea. So there was some differences here. Like this definitely seems like more of our early move, right? So like this particular head and shoulder looks a lot more like the first move we had than the second move. The second move has that what seemed to be more like an an SOS. So there is some difference there, but at the same time, this move reaches that support line at 510, which is more like the first move over here, which reached it at 510 or reached 101.31. I don't remember what that number was back in the day, but this marker, this is the first time it reaches that support line, that supply and demand line, that level that seems to be pretty critical. So absolutely, like, does this start suddenly looking a lot like what's happening? Yeah, but so did January. So why are they so similar? Because because they are. I mean, they're just basically the same fractal, but one of them plays out as distribution and the other plays out as, so the patternings are very, very similar. And that's how they're very misleading, right? In that regard. So you have this push up, the test. We came above it here. I think it pushed higher. It didn't happen back here. It didn't push higher. But I think we came above it here. We did make a higher low, just like we did here, higher low. We try to advance again, and it doesn't work out. You can see like the RSI on this point is very different. The RSI had already been cooled off completely on the 1 hour. On the 4 hour, we saw that widening really clearly. But here it's different. It's much more exaggerated. Again, I think it's a time frame thing. Like this is happening much faster than this happened. This is let's see, this whole range goes from April 11th through, it's about 10 days. It wasn't that slow. It was pretty fast. Yeah, it's a little more similar actually in timing than I thought. So never mind. We were just talking about January. That timing is way different. It's a lot more long-winded. You can see the widening here really starts back here. The spread is starting to grow. It's more of a curve than a trend, because I would argue the widening was already happening here early on. You see the spread growing. Similarly, we have that kind of spread growth here as well. So when it dropped through the ice, which was very, very close to the original support anyways, is just barely above it, that slide is kind of complete, and you get the LSPY, the last point of supply, and then it dumps. This ends up becoming a really important level later in the grand scheme of things. It ends up being the level that these two levels end up being the levels that we wrap around when we get back to August. So these are critical, you know, regardless of good or bad, they're still really important. Naturally, that happens in the market when you have a lot of trading across the levels. So that shouldn't be unusual. But in terms of structure, that would be important to note. Beyond that, you know, when I'm looking at this, I do see some like really different big differences here. So like one thing is like when this was rising, it actually almost approached, it was really high. It almost approached that marker before it broke out. We don't see that here. I mean, you could argue that maybe that's what's happening in that after hours price action or something back here. I mean, there was a push up and then we pull back down, but I don't feel like it's very close. It seems really far off by comparison. So this sets up a lot lower in that regard. But we did have this as a sort of a sliding S-curve, whereas this was a big bounce. This was sideways action. So there's a key difference there. We can look at what this might mean also. We should put this one backwards and just see where that is in relation to everything down here. So 446, yeah, it's the marker we dropped off of right there on March 19th. So if we were going to compare the two, I'm not really sure what I would call that. It would be similar to like here. I don't really see that comparison as the same, so there's not really much to say about that. I don't think they're hyper related. But I do think this is a, sure, I mean, this is an important distribution level. So this is like the last point of supply here before the bigger drop when we had our hooking action here. And this could be like a, seen as like a trend that was broken. I'm kind of curious where that was, the one we were looking at earlier. I had that on the chart for a long time. I took it off for some reason. It might still be on this bigger one. So that was a pretty critical spot. It does seem like it's kind of indicating that might be some of the target. I think of this up thrust was to go back and check that, because there, we talk about creeks all the time on this channel, and we talk about waveform. And the waveforms here, splitting this second waveform in half with that trend upward, it did catch on the second push up. It did catch right there. That's where it pinched out. And I said that's kind of where you'd want to see it stay. And it didn't stay, right? Broke down at like 505. But like that is also pointing towards an intersection around Tuesday back to the gap fill. So there's a lot of effort on Bull's part, I think, to get here. I think it seems like a very logical upward target for most people. This is just the next gap to the upside. It's near a fib level, you know, all that stuff. And now when you look at it, it's also the level that we actually distributed from. Or I would say maybe the creek or the trend, if you want to say, or a trajectory. I think about this as like the big macro hook line. You know, so anyways, I digress. And that's where I think some of these comparisons may fall short. And it's kind of interesting because I look back over here and I'm like, well, this was so deep and different. Like, there's just not much to say in comparison. But I wonder if here, you know, where you have one of those hooks. Yeah, I mean, it seems relevant. It obviously matters on like a head and shoulder almost, like that we resisted. We pushed that on the way up. Like this was the trend that was trying to hold, couldn't hold, and then this is the last place you kind of have that pinching actions happening, right? And then you end up dropping it. We return back there later. It ends up being kind of that slingshot that we talk about. That marker is really important. That trajectory is really important later on. We kind of grapple with it quite a bit. And when we came down, or excuse me, when we came up, I don't know, didn't really feel like there was a whole lot to grapple with there. But if you look closely, and you could probably see this in after hours, but if you look closely, like that is the marker. You probably can't tell, there's too many lines on my chart, but that's the marker that we kind of wrapped around, and then we came back down through it. So I think there's a lot of comparisons to be made with the structure and how it's, let's just say, finding itself on these ledges again and this and that. It's not going to be one-to-one, but there's similarities. So, anywho. Yeah, and then one of the big differences, I was just talking about how this was on the hourly, and then I switched this over to the hourly, and I already knew this because I looked at this the other day. This is where things get kind of weird, because I'm like, well, I was just doing a comparison with this range, right? But really, if you look at where we were, at least on EMAs, it would appear that we're more likely on this area. You know what I mean? Like on that potential breakdown area up here, because we haven't even dropped those EMAs yet. Whereas this had a clear cross and became, at least on the 1 hour, became more or less bearish at this time. So there's a marked difference in those two things, right? So you can identify like 2 or 3 pretty important differences here from this range. You can identify 2 or 3 pretty important similarities. And it kind of boils down to the same thing I've been talking about, which is that you have an accumulation and a redistribution have very similar schematics. And there's a lot of little micro differences, but on the whole, they look really similar. So, yeah. So I think what this 446 probably represents is, and I don't know what else it could mean in the grand scheme of all this. But I'm imagining right now that the reason we set up where we set up, other than just like other things that we've talked about, probably has to do with this 446 acting as a kind of LSPY earlier back in March. I wonder how far away that is from where we are now. I'm kind of curious. Monday, March 18th. Let's say to Tuesday, the 28th. 70 days. So 70 is one of those numbers that piques my interest because of T35. So there's a 35-day settlement window for futures. I don't know if I can add another thing on here. I used to use this this one, but honestly it's garbage now. I don't know why he changed it. But let me see if I can at least see the one backwards. Yeah, I don't like that you can't see the present one. It just doesn't work anymore. I don't think this guy like updated it. Hang on. I don't see anything. So it's way out here. August. I could measure it, I guess, but I don't really want to do that. Let me see if I can change it really fast. Looks like you might have updated it recently. Every time I click 0, it doesn't go to. It doesn't even show it anymore, which really bugs me. That should be the current time you're in. Uh-huh. Well, that theory wasn't too far off, was it? So this is reason that piqued my interest was because this is when we had options expiry for futures. So if you go and you want to look at this more carefully, this is it's called GFC. You see ETF exposure dates, roll dates, and expiration dates, and then T plus from fail dates. So T plus from fail goes up to 35, and that's 35 days from each of these initial dates. So it takes 35, and these green lines are kind of hard to see probably on your chart, but when I measured 70 days, I thought that was kind of interesting because it seemed like that was a bit of an odd number. So it made me think about the T35, and I think we're really close. So notice that the T35s go from here to here on those expiries. The price is driven down during that time. And that's the failure to delivers. So I need to remember that number. Here. So we're really close to probably the next one. Well, no, it wouldn't necessarily be even. That's not right. Hang on a second. I need to go check something real quick. So this used to be if you click 0, it would show you the current one. I don't know why this thing is messed up. I want to like write the guy, but I don't think he's actively changing anything anymore. It was a really simple enough to use indicator before, and now it's like all over the map. That's interesting. What is this supposed to represent? Why do I have a red line here? You guys are like, I don't know. Booksy just throws lines on this chart randomly. No, Hang on a second. I don't do that. Hang on. There must be a reason. Oh, that's November. That's the election. Yeah, we're at 485. So we're above the 482. We got a little rally going. I wouldn't put too much into it just yet. I'm going to double check. I don't think max pain has changed. I think it's still at 450. So we're kind of riding against the grain, if you will. All right, 486, so pushing. GME is at 1844, so it is kind of like what we thought. Maybe, you know, we drop and we'll see if we get a reaction back up. I'd still watch the levels at 1896 and then 1997. Because those two markers are going to be, let's just say they're going to be like tested on the way back up. Now I'm kind of curious though, because I marked this off because of the November elections. This is like October. So why did that look completely different on the other time frame? I don't know. It's messed up. Shouldn't have done that. Yeah, I don't know what happened. Something was wonky. So forget that. It is really close to that. This whole like fib expansion is like super close and in tight here. But that's way later in the year. So at 487, still like trying to push. Okay, whatever. Let me just do a simple way of doing this. I'm gonna just plop it in the middle. I don't think this is completely accurate, so I don't think they're actually even. So that's off in July. So let's do the so technically that's not, I'm not doing it quite right. I'm just curious now. So I'm gonna just finish what I was thinking. So we're at 45, we're just kind of sitting there. Yeah, all right. Well, my suspicions might be warranted. Gosh darn it. I wish I could see these things. Probably could just look it up. So it's the third Friday in the month, right? That's what Opex is all about. So I guess it would have been here, right? Which is the 17th. Is that the third Friday? Or is it, or am I early? No, I think I'm right, because I don't think there's another Friday. No, it should be this Friday. Yeah. So this Friday is the third Friday, right? Hang on a second. So unfortunately, it's not allowing me to. So I'm gonna just look up a calendar really quick and just make sure I'm getting it right. So unfortunately, it's not allowing me to show the current one. I don't know why it does that. There's something wrong with this dude's like code. I need to find a new one. Just find a new indicator. I just like that one. I thought it was really simple, but I might have to look for a new one here because it's silly, but I want to make sure I get it right. And with weekends like this, you just got to be careful. The longer weekend. So 2024, we're in May. So I'm just looking it up. So stop trading on the 17th. Options expired on the 18th. Quarterly expiration. What is that? Oh, there's the holiday. Why is it not listed? That's quarterly though. I don't need that. Never mind. Yeah, so 17th was this one. So let me check something else really quick. So we're at 484, so we're back beneath 45, but we're still above 43, which is good. You know how to do math, Booksy. Well, what I mean is like technically that level's 42. Like I've talked about it a lot as 45, but it's actually like that's where the support is actually at 42. So I've been talking about 45 because of the local level was at like 45, or I thought like we needed to be above 45, but it's 42 is the actual level. So if that confuses you why I said that, that's what I'm talking about. Okay. So and in April it was the 19th, right? Which is like right after this. That's where we have the and in May it's the 17th. This is future cycles. Oh well. Well, I don't know what to do about that. It's kind of annoying because it's not showing up on my chart and I don't know how to fix that. I wish I could just like put it in. Maybe I'll do it manually. But option expiration for the month of May was on this one. I thought it was always the 3rd. But it is the 3rd. But it's because May has like 5 fuller, almost 5 full weeks. 1, 2, 3, 4. Is slightly longer month. I think I got confused because of there's like almost like a full week because it goes all the way to the next Friday. I think that's why I got thrown off. Anyways, because the 31st is on a Friday, and I was thinking about it like backwards. Like there's only 4 weeks. I was like subtracting a week. That's not right. That's not. That was wrong. All right. All I had to do was look at a calendar, so that fixed my brain. Stupid. I was just being dumb. Okay, so it was on the 17th. So from that point forward, it might be worth marking it out. Let me think about this though. That wasn't originally why I did this though. It wasn't about that. It was about the T35. I mean, it's like a perfect 35 days, isn't it? Yeah, pretty much. Might as well be. Okay, so the reason that I brought this up to begin with is that you have I saw like a 70-day window. I feel like I'm trying to learn something right now and I'm not learning it how we need to be learning it. Let's get rid of this for now and this for now. Clean this up a little bit. You know what might be good? We're at 486, which is solid. But I think maybe the reason why it would be wise to do this is because it would be interesting to see that in relationship to those previous time frames that we were looking at. So I'm curious in specifically like the setup, not necessarily the end result, although that is important, but like specifically the setup. Trying to determine what it is, like what would be my goal in that. Like what would I be trying to, in that moment of like, hey, I'm going to look at, you know, I'm trying to think what would be the goal. Is it just to find the relationship between the two, or is it to determine? So like, it would be easy enough for me to go back and compare the setups. But at the end of the day, it would be better to compare this to this, not this to the past tense. So I'm trying to determine like what I want to achieve with that. Is it worth my time to really go after it? I'm not sure. It may not be. It may not be worth the effort. Because if I can't, and I'd have to go look at the data. The guy that does the video I was talking about, he kind of already did it. He did it for GME to some degree. He was looking at XRT and how it relates to those GME swaps. And it's a good video. And I'll go ahead and show you, I don't think it matters, but I'll show you the video. This is guy, Richard Newton, and that's just what he looks like, I guess. But he, I'm scrolling around this video because I was trying to find information, but he basically went through and looked at these kind of anomalies, like the big run-ups where there's giant volume anomalies, and he was looking at how it relates to the swaps, and he just charted it out. And it's a good video. You should check it out. And I guess if you like his stuff, subscribe to him. He seems like a smart guy. He seems very down to earth. So we're back to 482 again. That's my plug for him. He didn't ask me to plug him. I just watched the video, so. June 21st is the major Opex. I see people talking about AMC 20 strike, GME 100 strike, populating. I mean, that doesn't mean a whole lot to me. It's not that, so like if you use some service like Unusual Whales or something, A lot of times the activity on AMC and GME, and they actually posted a report on this recently. You can go read it. The activity that they saw was right before the move. It really wasn't way early. And that's typically what we've seen on AMC and GME, is that there's usually some unusual options activity like right before a big run up. It's not months before, you know. And I'm always cautious about that kind of stuff because I don't know what it is, but I guess what it is very simple. It's like go look at what happened in October. There's so many times, like October of 2022, there's so many times where retail gets it so incredibly wrong through the options chain that it's a very difficult thing for me to just be like, yeah, okay, there's some kind of major significance in this. I couldn't even believe it's a difficult one for me to talk about because it's unfortunate, but there was a lot of folks that were looking at the options chain going into October saying that retail was like prepared for some great fall and we were all ready. And I'm like, I don't see it. And I happen to be right. And I mean that in like a very sincere way. Like I'm not always right, but in that particular case I was, but it was what the reason I remembered that was because there was a dude that I used to chat with. I used to be in a Discord with him. And at the time I was still on Twitter, and he was posting about how he was basically like bragging. I don't in like a not in like a braggadocio way, but he was saying like, "Oh, retail's prepared, but the media won't prepared with puts, right? But the media won't spin it that way." And I'm like, "Yeah, but it looks like it's going to turn, and it looks like this is an opportunity for them to flush and then rebound the market, frankly. And it doesn't seem like retail's going to be right." And I remember that because he was like, I think he got kind of annoyed with me because that's how people are on Twitter. You can't like debate anything. If you start debating something, people get pissed off. But I remember Colin Gladman came in and was like, well, market makers always want to make money all the time, you know. And he was basically like defending this guy's position, like saying you're not making a new statement in what you're saying, Booksy. You're just kind of parroting what we already know. So like you could be wrong too. And I'm like, yeah, I could be, but it was like there was a historic number of put volume at that time, so that it looked like the market could drive lower. And I'm like, that seems like the exact time that a market maker or a bunch of institutional investors would screw over the market by turning it. You know what I mean? Like, if there's zero desire to drive the market low at that particular time, and that's the thing about options that's kind of strange with liquidity and Wyckoff, is that they're kind of separate, but they're kind of not. Like, options are still used to manipulate the market, even though they don't actually have to manipulate the market, if that makes sense. So they can be used like a share, or they could not be used like a share. It's very bizarre. But I've talked to Stockfather about this quite a bit too, and there's not as much material because it's a little bit more modern, I guess. There's not as much material written about Wyckoff in the options chain, but he's like, well, the general consensus is that options are still used as a way of manipulating retail. So I still think of the options chain as like a manipulation tactic. But I think that the guy's video that I just posted, it kind of hints at a different kind of issue, which is the failure to delivers and how those are resolved. And it's the more of the concept of kicking the can down the road, not just, oh, there's a bunch of big money options for this particular date, which is oftentimes what we see with like the unusual whales call out. And they did a report. You can go check it out. It's free. I mean, I found it for free. They did a report on AMC and GME. And again, it was like most of that stuff happened right here in early May. It didn't happen, a month prior. So it was very, very close to the move. But I think the swaps and stuff like that, kicking the can down the road, failures to deliver, those kinds of things seem very tied to market anomalies. And we talk about max pain like every single week, right? The market maker obviously has a major impact on, and the options chain has a major impact on price movement. And I'm not ignorant of that. I don't have as much expertise about it. So that's something that I don't tend to focus on very much. If that makes sense. So anywho, so we just hit an expiry date here, and so I'm looking at 35 days from there, you know, seeing what we might see in terms of that timing. I'm just kind of curious where it lies. I'd have to find the data for it, but that's when your FTDs would be due. It's 35 days out from the expiry. So, and I'm kind of curious. So that's June 21st. I'm just kind of curious about the other two run-ups as well. Anyways. Maybe more to come on that, but so I'm going to leave that on the chart. I'm not going to get rid of it right now. I'm going to kind of make it like the same colors as that indicator, because that'll help me remember what the heck that is. That's an interesting little intersection too. Where does that come from? Because that's at 5. I mean, that's like right at 5. It's at that same level. These are a little different, the ETF ones, than like the, because these are going like every few months. They're not showing you like every single month, right? So that's kind of the other thing. So it's way out there. So anywho, this is not really the same as what we're talking about here. I'm like throwing myself off. Whatever. Let's go. I'm gonna go check it out though, just cause. So the price is at 483. We're just kind of chopping. I mean, I'd love to be really optimistic here, but I'm just not. So I'll be bearish, whatever. I'm just not feeling it lately. Yeah, this volume still like dwindling. There's a consistent drop in volume with widening an RSI. It's a build-up for a potentially significant move either way. So just like we were talking about yesterday, you come to those like pinch points and you're waiting for the next move. That's kind of what we're seeing right now. It's like, I think we've approached that pinch point. So now this guy that I have on the screen, this downward trend is really more of like a fib fan. So if you think about it like resistance, fib resistance fans, those are indicating where you might hit resistance levels as you kind of branch outward from a move that's over time, like going left to right, not just up and down per se, because they always relate to tops and bottoms the way you draw them. So they're almost always related, not just to up and down movement, but the price movement across time typically is more relevant because of the nature of the fan going outward and downward, or in this case, downward and then outward. I'm not drawing a fib fan on here, but I've got two anchors. So this would have been the last push out if you were talking about a fan. We could do one just for fun. But if I do one, I'm going to hide the rest of this stuff. And I'll come back to this in a minute. I want to look at that a little bit more. AMC's at 482, GME's at 1817. I would think we'd still need to come back above 20, so we're still ways off. I haven't really talked about other stocks as much. And you kind of reversed here. I'm not super confident about this chart right now. Feels like if it did do an SOS, it has to hold here, but it's also got a potentially very distributive top with a gap below at like 11. I could see us potentially breaking the trend finally because it's already hit like all-time highs. It's a very powerful chart, very strong on the whole, but I don't see it necessarily continuing upward. So I'm bullish on it long term, but I may not hold my shares. I probably won't through downside. So we talked about charge point yesterday and the need to kind of jump this creek, which is just a downtrend. I don't see it as out yet, but it's kind of like right there. It's wrapping around the 30-minute 180 average, so kind of a double bottom situation. Could be a big reversal move if it can manage to break that and then get back above 175. Still the same as yesterday. It would need to be above this level right here in order to continue to advance. I haven't looked at IWM, which is the Russell 2000. Yeah, with the IV so high, I hope his kitty's loading up cons when he decides to strike. Otherwise, degens are just going nuts, just handing money to the MMs. Well, that's kind of my thought is that when the IV's up like that, you get a lot of people who are making a lot of money selling the calls because the IV is going to come down, right, after it's so elevated. And those contracts are just going to dump in value. All right, so it came lower than expected for sure. I made that marker at 206. Actually, it did not. I don't know why I said that and I didn't make a marker there. The marker is 204.85. It did retrace all the way back down and dipped below the previous support at 202. So it's very much like a retracement back to that 201 level. It's funny, like that's the first thing I thought might happen, but I just thought it would happen earlier. Man, I need to like stick with my first instinct sometimes, don't I? Because like and it sucks too. You know, it's like the worst thing about streaming and stuff like this is that if you doubt yourself and then you're wrong, it's hard to like go backwards and be like, oh, well, I actually kind of got it right. But then you really weren't right because you technically changed your mind. You know, and you're like, gosh, if I had just like stuck to my guns about going back to 200, I would have been nearly right because it went really close to this 201 level, not 200. But I think I said originally I thought we might push up, advance to the creek, and then come back down. And instead I changed it. And I said, well, if it stays strong into FOMC or whatever, that's not the right date, is it? Now I got to go look that one up again. What a messy day. The Fed meeting is what I was looking for. I thought we might be set up before the Fed meeting to make a big move. So I was looking at potential places where we would, you know, move. So it's released on May 22nd. But it's already out. This is where it was released right here. Oh, you missed that, Booksy? And then apparently it dumped. But I actually think that might be a good sign because a lot of times these things, like, they dump them right before they move up. They dump them and get out of positions if it's bullish. It's happened a few times. Why has the meeting calendar changed? It used to say something else. April 30th to May 1st. The next one's not till June 11th and 12th, which is what we were talking about earlier. So that is coming up. Yeah, I don't know. I think IWM, we'll see what happens here. It's a tricky one. I still think it could come back down to 200 potentially, but it should be in a place where it's ready to consolidate and then advance. It may not happen till June though. You know, I could see this being kind of a dwindling sideways action until here and potentially advance. It's established that creek again, so that's a plus. Like, we've got confirmation on that level twice, so that's good. That's a good sign. My goal here is not to necessarily catch a bottom, but rather I got out of all my calls because when we pushed up here, I didn't think we would advance. So I played this one pretty well. I'm proud of myself for sticking to my plan on this because I got in a little early. So my calls got a little red and I was like, that was dumb. But then, you know, I was like, I'll just average down in this case because I'm really confident it's going to come back up. So you play with confidence. You have to, you know, scared money won't make money in that regard. And I ended up making money on it. So I was really happy with that. And then I was like, well, I think we're going to top off. We had divergent RSI on these peaks. We were hitting the creek. Just seemed like, yeah, we're probably gonna reverse. So I got out. I think I got out before we even hit the second top, but then it was like, oh yeah, it's divergent. We should see it turn. So now I'm kind of curious. This might be another really good play going forward. I don't want to do what I did last time because last time I jumped the gun thinking that the bounce like here or something was like the end. I don't know. It was like one of those moments of where you think like, that's the low, you know, it's just going to bounce and reverse, and it really isn't ready to go completely up yet. This might be different because they released the notes on the 22nd, so it could be a strong reversal if it has a good volume input. So there's this kind of midway trend here that's like a trajectory that I've been using from pretty far down low back down here. And I think it's a sort of like a waveform trajectory, and one that relates to this. It's a waveform trajectory that relates to the upward trend here. So there's an upward trend, 1, 2, 3, 4, 5, and then we haven't gotten 6 yet because we stopped short of it. But this is the midline, I think, for that cross-section line rather that I use. And it's for that trend. And so I think that all of this working out across these previous highs, this is potentially an SOS, right? And we talked here about coming back down. That happened, and then you push back up. You would expect, if it's strong, to have some continuation up here past this point. It's not a guarantee. The timing is going to be tricky, though. You probably could make the argument that, yeah, it's like wrapping around this FOMC, and that we may actually see like a sideways range here that doesn't really move until later. The secondary option there, and this one's kind of cool because it goes back, but the secondary, let's just call it a potential move, is that it hits higher because there's actually an upper creek here that's much, much steeper. But this one would have to like either already hit or basically be about to hit. And I think it already hit. Like, I think that was this move. So I think it's already basically hit it. If we were to advance early, we could see it go up to 216 by the FOMC. That would be like an early advancement here. That also kind of correlates to that trajectory. Most of these have gone fairly parabolic. Like they get very narrowed and then they end up kind of peaking twice. I feel like we already kind of did that here. Like we got narrower, we peaked once. We might be going up for a second attempt at 209 and then come back down. So sort of creating like a flat top area before any kind of advancement. Maybe we push it a little bit, but probably just chill. And then this is going to form out a bigger range. So this is like an auto reaction back down. Yeah. It may not really resolve itself till here or shortly after. So I didn't really want to play the upside again here, but if you were going to play the upside, you might consider going up to maybe 208 again from here. It's not a huge move, but it's a possible upside move from here. I'm less inclined to think it just runs from that point as opposed to sideways. I feel it's more likely we're going to see a little bit of chop and then potentially move. We may just leave this channel behind at that venture, or that juncture. It is a bit steeper on the top than it is the bottom. It's not really like a perfect channel. So it could be that that's where we get this connecting move from here, maybe 205 up to like 218. Those levels are important going back in time. So these are downtrends from like all-time high. Those are like more like creek lines. This particular level at 216, maybe up to 218 would be, as you can tell, a big important move, because this is basically like every time you dip below here, back in 2021, this is where you had support, and thus far it's been not breached again. So we haven't even attempted to get to all-time highs. So I would say it's a very critical level for that reason. And then same thing like right here around 225. So there's a nice little bracket up here that I think would be your next possible range attempt. So if you were to hop this creek, I think it's very likely that you come up here and you try yourself against, I mean, you will, if you do advance, you will hit 216. That's probably where you'll see that sideways. And you either get support or you don't. But if you do, you probably head up to 230, which has kind of been my goal. Like every time I bought leaps, I was buying them for like end of the year at like 230 or like next year at like 230. Because I've had 230 on the chart for a while, 226 up to 230. And I think it's very likely if you get this movement that we see something like that. And then I do expect at that point you probably chop sideways and maybe even head back down. I mean, technically that could happen here. You know, it doesn't have to be where I think it's going to happen. But yeah, regardless, seems likely. Yeah, it could be way later in that regard. What we saw back in 2020 is that once the Russell made an SOS, it advanced much like what we saw in SPY. So like it was a similar kind of rapid fire movement to the upside, but it just took a little longer. And once it made that SOS, it didn't really chop much more. You didn't see a lot of this kind of stuff. It was pretty strong, and it just kind of continued advancing. I think in this case, you might expect, if this does hold, you might expect to have a move past this range even. It may not stay here very long, you know. If it can make these checks pretty quickly, I think it would move on and try to go for all-time highs. Probably by around election time, which in my opinion could be like way up here. So, and I've had a lot of back and forth about this, thinking about the how it might relate to like AMC's movement or small caps in general that we're watching. And the big picture, you know, for these movements is that you could potentially have a move that's really, really, really far, like up to 300s. But I don't think it's going to happen I don't think it's going to happen, I don't know, this year, the more that time goes on. Because the Fed is talking about how they're not going to slash rates, and the steadiness of that has caused, like, the fact that we're not, you know, increasing rates definitely helped with the larger caps, but sort of like flattening off. The smaller caps are different. They don't have as much stability when it comes to like that kind of stuff, like, because they don't have a huge amount of cash reserves usually. So a lot of times they might have like a greater, like if you're talking about inflation or stagflation, rising interest rates, them staying very high, it's a suppression for like small businesses, and you're not going to have. I don't think you're going to have a lot of that. Ultimately, that rally on the smaller caps until rates start coming back down. That's just my initial thought, based on what I've seen. Excuse me, and what I've read into. It just doesn't seem like there's a, like, clearly, like, we haven't really seen it explode yet to the upside. It's not even out of the previous bottom. So that kind of says enough to me from a technical standpoint that we're getting there, but we're not really there. So anyway, I'm watching this guy carefully. I think it's a really good play. I think that IV came down quite a bit on those calls and stuff, but if we end up chopping into FOMC, you know, there's still a lot that could happen here. Like, this could fill out a much larger range. You could still make a lower low, you know. You might see a sudden drop. That's maybe when you get your drop to 200 and then just take off. You know, all that kind of stuff could happen. So I'm not going to play anything on this unless I see it break this outer creek. Then I think it would be a really good buy. Or if I see it drop to 200, I might consider a little play against the trend there for a reversal. And that's kind of where I'm at with the Russell, which is a reflection on a lot of the market, I think, that we look at. A lot of these stocks that I look at are small caps, so they're great for some reasons. You know, they can be really volatile. They can have these massive moves over time, but they're also really volatile. And they can be really frustrating, like we've seen with AMC. Yeah, this is similar too. You get this widening here. They're all kind of moving in sync. Widening, widening, widening. So is it going to be a bullish kind of widening where you're going to see this a bullish continuation, a bullish reversal? Or is it going to be bearish and just dump? Like hardcore. What about GME? How about GME? How about that GME? Okay, so GME is in a similar situation than it was yesterday. So it has a very similar kind of build out in that regard, where you may see like an early day reversal, or midday reversal, I should say, since we're approaching midday already. Still morning, but you might get a midday reversal. You're getting a widening here. Same kind of thing happened yesterday. Early in the day, you had a here, let me get rid of this stuff. You had a potential reversal early in the day, and then it kind of flatlined after that. Based on where we are, the sell-off that's just happened, I would say this is probably, if it's not a selling climax, it's like really close to one. So I still think that this could be a situation where we see a really hardcore, very interesting reversal happen, you know? And I know I'm talking about AMC, talking about distribution this morning. I get it. I still think that's a very real threat here, a very real possibility. Based on this setup, it's just not clear to me. And that's all there is to it. Like, I wish I could tell you, but I can't. This one did unfortunately break down out of that early diamond structure, and then I don't know if it's gotten there yet, but it's like really close, you know, to filling that gap, and also that target. The target for the GME, here, let me just do this. The target for that GME diamond was down here. I mean, it was at the gap. It was really simple. It's these little yellow boxes I've got. So it ended up being like a pretty much a 1-to-1 target. That's not always happening, in the market, but it does happen. And then sometimes you get a bizarre kind of double reversal kind of thing. We've only really seen this a couple times on this stream. I think probably someone who's been in the market a lot longer might be able to speak into it a little more. But a double reversal would be like if you come back above this break here at some point in the future. I'll make it a different color so you can see what I'm talking about. If you came back above this, you might even expect it to have the same price target. I know it's weird, but every now and then you get that kind of double reversal, and it's bizarre. I don't really know what's going on underneath the price that causes that to happen, but that target might hit later. I don't know. That's why I'm keeping it on the screen anyways, so I'm not going to go into that much more. But here's what I'd say about that. There's been a drive to get to lows, and I think at this point, if it manages to hold above the gap and reverse above 20, I think you'll see a reversal happen, like a bigger reversal. Like that's where I would say the reversal happens, period. I do think first you got to go over 1896. Either of those spots could present a distribution top. So you could reach those and distribute and just continue downward. Like there's a chance in either case that they fail and you head back down. But if you manage to get above that $20 mark with some support, I think you've got a chance at this creek, and then you've got a chance at a pretty massive move back to at least like 25, and that just kind of getting you started potentially on a bigger reversal. I know people are talking about the dilution and all that jazz. I'm not ignorant of that. I'm aware. We've talked about it on the stream a bit. Like that could play a really big part in this for sure. All I'm saying is that it already fell through the ice here, which was at $20. That was yesterday's price action. It just dropped end of day, dropped quite a bit, right, after it broke down here. AMC's got that similar level at 446, so that's kind of what I'm watching out for. That's why I was talking about this morning. You don't want to see that drop, but now that it's here, could this potentially be a reversal? Sure. And this kind of a patterning happens on the market. We've seen it all the time. It just happens. I don't know how else to describe it other than it's a really common bottoming pattern. It's also a common distribution pattern. So like if it distributes, it's often like that, right? Where you're kind of like trying to come back up above that level and you don't, and it fails. So it's a stone's throw away from either one. Both of them look very similar in the Wyckoff schematics because an LSPY, for somebody who's like maybe not paying attention, an LSPY might look like a spring. A lot of people have said something's a spring and it's really an LSPY. And usually you can tell as soon as it breaks down, you're like, nope, that's going to break down. So I think the impetus here would probably be on this $20 level, which is what I've been talking about. I don't really think there's much else to look at right now. I wouldn't expect anything to happen until you break just like the local trend. So you could look at that, I guess, if you wanted just another thing to look at. You might see that reversal happen. And if you're playing like the market just to swing, maybe that's where you'd enter a swing trade. I probably wouldn't do that on a Friday, but going into a 4-day weekend. But I guess if it broke here, you might try to play something short term. I don't know if you're just interested in that. I'm not a big fan of that kind of a Friday trade, but some folks like that. I don't really like trading Fridays if I can avoid it. This doesn't ever usually end very well. Because if I believe in a setup, I'll trade it even if it runs into a Friday. But if I'm not sure about a setup, I'm not gonna like jump in on a Friday just because that kind of stuff usually doesn't end well for me. So yeah, you're getting these like parallel drops here. maybe they're not quite like that. You might want to use this top line actually. Let's see what that does on the bottom here. It might be pretty similar to this bottom. And it is. It's pretty similar. We can get rid of this one too. We can get rid of these two. We already know what they were targeting. They were targeting the gap. We don't need them. This would be one that you would reject against if you came back up and failed to advance. So this would be like a distribution marker if you can't get over this guy. Go into the upside. Yeah, that's pretty much how I imagine it too, like over here, because if this is a if this is a channel, right, and it builds itself out as a downward channel, then what you should be able to do is take from top to bottom here, you should be able to draw like a 50% marker, and it would roughly indicate like the halfway point, obviously, on that move. If it didn't reach the marker, you might want to use the previous one and use that instead. Kind of looks like both of them are equal parts around the line I drew, so I'm not sure which one is more accurate. But one of those two lines would indicate kind of where that waveform is, so you would expect, and I think it's a reasonable expectation. I don't think it's like snake oil or something. In a trend, you might expect that to be, that's very often like where you're going to go. You know, it might assume if it's really bullish, like an upper trend, like way up here, like might try to come back to this marker, but it's already left behind the trend. So it would have to be like after a breakout anyways. But on like a more let's call it a neutral move, usually like trajectory in, trajectory out matters. And then in terms of reaction, and then typically I would look at this as like, this is probably where I would see that move happening, and I don't find that to be unreasonable. I think it's very common, and it's just a way of understanding that movement. So, you know, one other thing we could do is we could look at a fib level and see if we can determine, I think it's that guy because that's the trend. We could look at a fib level and see if it makes sense as well. From where we are now, it's a retracement back to 618. If we were to go a little lower, it's still right around the 618. It's not that different. So it's basically like a 618 retrace on the previous move. So it looks like we're targeting that $20 level, the 20.73. Does anyone remember what the wick was? The gap filled, it was 1805. Well, I don't know what you're using, but mine's not 1805. I have a closing value here of 1749. It's one of those debates that we've had before, I think. I always do the gap to the closing value on, so the body of the daily candle, no wicks. Well, there you go. So the daily gap's closed. But I always think about it as just where is the pentultimate, you know. You might be right. I don't know. That's not the way I usually measure them. So if this is the waveform, then you might expect there to be some kind of a symmetry there. It doesn't have to be, but yeah. So that makes sense. So hitting 2080 on Tuesday seems pretty reasonable. Was there a wick in after hours that went up there? Somebody said something about an after hours wick on GME. Let me go check the Discord real quick. It looks like AMC's pushed above, is ready to move up. What the heck is that? Why did I hear myself talking? I'm going crazy. Don't do it. All right, I have to stop talking. I can't. I'm hearing myself talk. I don't like it. All right, I have to stop talking. I'm hearing myself talk. I don't like it. All right. Nope, I don't like it. It's not funny. It's horrible. I think it was Discord. It stopped. So it was 2058. That was the number. It was some kind of a gap up value to like 2058. So it's interesting. Yeah, that's a bizarre value. Who the heck is that? No, I just didn't know what that was. That's really annoying. Gosh, my voice is so obnoxious to myself. I don't know if everybody else is like that in the world. You just don't like hearing your own voice. It sounds so different in your head. Ugh. It's gross. Yeah, it looks like we're getting a little rally into midday here. A lot of the charts seem to be moving up. Let's take a look at AMC closer up. Thanks, I appreciate that. I don't feel like I have a bad voice. Like I've gotten used to hearing it. It's just not my. I don't want it. It's like I don't want to hear it. You know, I don't hear yourself speak. I'd rather not. Let's go to the 30-minute to start. Kind of curious about that widening that we were talking about. So on the 1 hour, it was a little different looking. This one's kind of pointed down. I like that better. It definitely seems like it's recovered from that move. I would say it's this trend right here. Why am I looking at this right now? This is and actually this looks like a flat bottom too. This does not look like it's widening with a downward movement. It looks flat. So it's found support here again, maybe even, so you'd want to consider that. I would be looking at this to see what happens with the price movement versus the RSI in this particular case, because it's a widening. I'm curious if it were to reach the high early, like if let's say we only came up to like 5 and this was like peaking, that could be of interest to us. I picked 30-minute. We can keep the 1 hour on the chart just to have like a larger time frame. I hate this stock so much, guys. Like I hate this stock so much. This is stupidly frustrating. I'm sorry. Don't mean to say that, but I cannot stand this back and forth. Like it did the same thing that it did here. And it's a greater degree because you made a bigger move to the upside that needed to be an SOS as opposed to this one, which, I mean, it could have been a number of things. This one had to be an SOS, and it had to be an SOS with a backup, and you can't come back down. It reminds me that yellow path we drew. I didn't keep any of that crap on the screen, so of course it's gone. I didn't mean to call it crap. You can tell I'm irritated because I'm throwing out middle school or elementary school curse words like crap and stupid. But I did say this could be like a wraparound here of yesterday. I said, well, you could see a wraparound or something like that somewhere in the middle. I think I did it like this, and it was like clearly not what was happening, but now I'm wondering if that was actually probably the best one to pick. I got rid of it. It would have been based on, if that were to happen, it would have been based on this. So it would have been based on the last known creek. And there's two possibilities. One is high to low here, and then the other two is this, ignoring the buying climax. Both are important to mark off because you could be wrong about the buying climax, and it might look like it's breaking out of that one. But there's always another one. If these are pretty close together, usually end up with a secondary one, and we do have one. So I'm going to put those both there. So you might, it's like a misleading breakout sometimes, that first one. You might think, oh, it's jumping over, but there's another one. And that often is the one we stop at. That could be the $5 mark here, 505 again. I marked off 510. I think I got rid of 505. But yesterday, 505 was a really big stopping point for us. So I'm going to bring it back to the chart. We'll just have it there. And we'll just let it do what it's going to do here. I could break it down a little further. I think for now, we're back above the 30 there. We're still not really way above or anything. Let me check this marker too, because we might reject early here. I'm going to go zoom in a little bit. This is the 6 minute. I've talked about the 6 minute a lot. You know how I've said like the 6 minute is a really good indicator for turns on AMC? It really is. It really is. It ends up being one of the better indicators when it gets to these overbought periods versus oversold periods. It's not perfect. But the way I did it was above like 35, I think, and below, I think 65 or 67. I don't know. It wasn't actually like 70 to 30. Like you can use it like you would a traditional RSI in terms of overbought and oversold. But I want to say I like brought it in to like 67, and I think it was either 33 or 35. And those end up being a lot better on the 6 minute as really good turning places. It's not perfect again, but in terms of like buy and sell spots. So the reason I'm bringing this one up, and because I'm about to check something else, and it looks like it's really close to that kind of area. Okay. Yeah, so that's like a hook zone. That's the place that you'd probably see. So we were talking about this concept of ice. I was talking about it briefly, and then I really hadn't explained it very much, but the ice is the area that you have kind of your last main support before like a second ear, if you want to call them the ears of distribution, and you usually get a little LSPY there. That's what we saw yesterday during the breakdown, right around 492. So we've approached it again, and then oftentimes, though not always, that move is connected somehow to this is what I would traditionally refer to as like the hook. There's another one that's way steeper. It's like way up here, but we didn't actually go back to it, so I don't know. It'd be like that one. Right, both of these guys. So those are the ones I'd refer to as not the hook, but like what might determine where the waveform goes later. We talk about those sine waves and how they break and stuff. So before we get too excited here about 7% upside, it's important to note that this is an area where you could have some problems, because you're going back up to that region. So I don't know. It looks like a little gap there too. So I would really carefully watch the trend here. Watch to see if it goes sideways. And if it does, this is a natural rejection spot, basically, as I was trying to say. This one's not really relevant right now. So we'll get rid of that. So these downward creeks are going to be the ones that you'd have to break in order to have like a bigger run. We're not there yet. We're approaching them, but we're not there. These yellow guys, are defined as kind of your last resistances, or your last supports rather, and resistances on the way out. So you might even not want to do both and just take like an average of them. It's probably going to be somewhat similar, and it would give you just like a single line, like right there, sort of maybe an aggregate of the two, something like that. I can't do that very easily because it's like hard to identify where that is, but if you were going to draw this out as like, where did you find support and where are you now going to have resistance, that's where I would do it. I'd be looking at this pocket and then the one we just saw on the opposite side. It's like a little bow tie, but that's kind of what I would expect. And then specifically, I would look at that as it relates to the creeks and that outermost creek and be like, yeah, that's the region that you're going to have a lot of trouble. If you did advance here, I think this would be really critical to get it back above. And there's other things. I mean, we've got other ones marked off, but it just so happens it's probably going to be like a 50% to the upside kind of move. If we go back to the top here and you look at the 50% marker, it's right at $5. So, you know, it makes sense then that this is like a contention area. Then it makes sense when you look at the setup, you're like, oh, look, that's where support was, and then it was turned into resistance. That's where support's going to be. It's going to be turned into resistance. And when you look at the 50% marker, you're like, oh, yeah, the 50% marker now is directly at 5 when you compare it to the other cross on the other wave. So it's a way of triangulating a move, potential move, because we don't know for a fact this advances. It could reject and head back down below these levels. But if it got above, it's a pretty natural place to have that happen. It's right at 50%. I know you guys poke fun at the lines a lot, and I'm with you on that. I think they're very much like spaghetti at times. But to be honest with you, like, when I see stuff like this and I'm like, oh, there it is, you know what I mean? That's where I'm like, okay. Clearly, like, whatever I'm doing is at least mathematically sensible. I don't know if it makes sense in terms of a predictive model, because you still can't always predict how the stock's going to react to a certain level just based on the fact that you have the level. Doesn't mean anything, you know what I mean? Okay, I've got that level, I know that's where it would be. But I guess at the very least, if I saw that happen and then I saw it advance again, we've been resetting these like every day. But that's where I guess you'd have more of a confirmation down here of a move. Once it got into this little pocket, basically on the upside of this yellow, it's like McDonald's colors here, right here. That'd be like a confirmation zone for me. Maybe up to here. Yeah, so there's your rejection. That was kind of expected. I didn't really think it would continue on the first attempt. We're already up to the high. We're really close to that marker on the 6 minute. And it's my hipster level, but it works pretty well on AMC when you see it make that advance, especially if it dips low and then it comes back and finds support. This one kind of dropped early, so we may have another swing at it. 6 minutes, not, the end all be all. You can see on the 1 hour, kind of ignore these lines now. Let's get rid of them. It's confusing. You can see on the 1 hour, there's an attempt to try to advance maybe beyond where that moving average is. The moving average seems very heavily tied to this particular trend line that we've been looking at. It seems like on the 1 hour anyways, yeah, like we've been finding support here. You see that support that was found on that trend? It's like the same time we found support here right above it. Like we crossed over. So these seem really, really tight on the 1 hour. When it comes to this trend, it's like almost perfect. Yeah, that's an ugly drop, huh? So there's your profit takers who saw the move and decided that was it for them. Yeah, it's pretty darn close. Thanks, MC Cheeks. Appreciate it. And there's nothing wrong with taking profits here if you're not comfortable with the advancement here. I mean, it's still max pain, still at 450. There's still a chance that this is just a massive hooking move, you know, as part of a distribution, just an LSPY type deal. You're just coming back up and retesting a previous support, so it's complicated. Maybe complicated is not the right word. Complex is a better word. Complex. Yeah, and I'd say like overall, like options have been kind of all over the place. Volatility is still really high, so little tiny moves have been making really big waves on these. On the contracts, you know. So, and I mean, they seem to prefer downside. Upside's not giving you a whole lot of return. Downside's giving you a lot of change. Upside's giving like minimal percent change on calls right now. Downside's giving a lot greater change. So that tells me that it's shaking down those prices, pulling them down. It's been pretty effective so far. Yeah, I think MPW is just really struggling. This is what I'm just watching. This looks very distributive to me. Just this big up thrust. It closed pretty low here. It didn't really hold that level, and now it's looking like it might want to try to go further down. Wouldn't be surprised to see it kind of come down and finally to that 479 level. I was talking about that earlier, and how I didn't really like that it was, you know, weak in that way. So it is what it is. Man. Yeah, I'm just hanging out. Back down underneath 481. So I'm just kind of wrapping around this level. We may range out here, we may not, you know. Just made a quick 38% retracement. 50% at 475, 618 down at 471. The 786 is down all the way down here at 465. So it also would correlate to this other kind of cross trend that I have, which is more like a creek line. But nothing to say just yet about that. Charge point's trying to make a move. There's divergence on that bottom on the 30-minute. See the lower low on the price here, that dip, and then the higher RSI. That doesn't mean it's going to run. It just means that at least from this bottom, it might have been a good place to buy up. So if you see that bottom and then the break, it could be pretty strong because you've got some momentum behind it. I still think this could run into trouble up at 183, which is this previous level. So it's not over yet. GME is in maybe a similar situation where there's a little bit of a glimmer of hope here, but I'm not quite convinced yet, if anything. I think there's a lot of time left today that a lot could happen, and frankly, seems fairly, I think I'd be fairly confident to say, even if this made a new low right now, that I think we probably come up to 20 again. So that's not a bad trade, you know. It's hard to say, though, whether we do that without making a new low, because I think that's a different question. And you could see this coming back down. It's a little bit like what you saw on a lot of our bottoms, where you get that kind of small m, big M, small m. So, for example, if this broke down locally, I think you could see another low. And then potentially, like, that's where you could see a reversal. If it's an LPS, you don't have to do that. You may not break down at all. You might just hold this mark here. Seems possible. Either way. But yeah, I could see it coming down and attempting to make a new bottom below like 1770. I still have the gap at 1749. So you don't have to agree with that. If you think that the hourly candle fills the gap, maybe it's already done. Maybe I'm wrong. There's a little bit of an inverted head and shoulder here. Timing wise, these usually are about even. So it's just maybe a matter of opinion. I don't know on that. But it would suggest that you could get there pretty soon. I go back and forth on this kind of stuff all the time because, in my opinion, like it's like the definition of it can't be determined until, like, you can't define it as that until it kind of breaks out. You can kind of see it, look at volume, and see if the volume makes sense. You know, left side, right side, left side, right side, left side, right side. So what you'd want to see is that sellers, maybe even flip it over just to help. What you'd want to see is that as sellers advance, they're losing steam. I think it's a hard thing to kind of argue right now. We do have a secondary advancement here. I'd say that's probably your neckline. And that is weaker. I mean, it looks weaker. I'm not seeing a big pickup in buying, though. That's kind of where the rubber meets the road, liquidity-wise. You'd want to see, as the selling drops, you want to see like a cross trend, basically, where the buying is increasing. And it's all kind of coming down or fairly even. This does look like outweighing, though. You look at these two peaks. So it's meh, you know. That's when I wonder, like, sometimes I wonder if we see the head and shoulder, by definition, it's always in that cattier area because it always does the same thing. But I always wonder, like, you could see it still go for like a spring action. And actually, I said it could come down really low, but I don't think it needs to go any lower than, much lower than like 1790 to be considered like a spring. Like that still would look like a spring to me. I know you guys are like, it's upside down. I know, but that's what I'm trying to say. Like that might be part of the reason why sometimes these head and shoulders get kind of confused. Like you could come down lower, but I think that that's about as far as you'd need to go. Yeah, like it would meet this trend and then reverse potentially. If it didn't reverse on here, it'd probably just keep sliding on it until it did. If it's an LPS, it won't obviously go there. It'll just stay high right here. So you've got a level here and a level here. And the reason I'm not calling it distribution, even though there's like that push up and what seems to be a cat ear, is because at least for now, it hasn't done anything here that makes me think it's distributing. Like if this popped up really high first, then went low, I would be like, oh, well, that's not great, you know. You could be in a bad situation. And especially if it went above 1876 and then dropped, that's distribution. That's different. That's like a hook. And that would play out usually from like bottom up through this ear. So it'd be like that. That's usually like distributive action. But the kind of flat and low build out isn't actually bad. So keeping this kind of contained, that cat ear could still produce a possible spring action either right below 1808, which would be like a larger LPS. So that'd be like a localized little spring where it comes down beneath 1808 just slightly. And that gives you maybe like 1807. That gives you an LPS on the bigger one. Or, you know, if it were to drop here and head below this marker at 1792, that's a little bit more like a spring on the larger one. Both of those would be okay. Possible bullish price action. So you just don't want it to come too high first and like have an upthrust. So if you saw a massive influx of volume and then it slid back down, that's where you run into trouble. Yeah, that's typically where we see problems on AMC. So at the moment, it's neither healthy or unhealthy, but I would say it's kind of neutral, but it looks, I guess, okay. Because it hasn't really worked itself out yet. The one thing that bothers me is the lack of buying. Because if the shoulder is finished, you're not going to get much more movement here. You might get one more pullback and then an advancement. Because there's not much time left in that structure. That's not like an always thing, so... But usually, like, the length of the shoulder is about equal to the... So the way I'm drawing it out is kind of weird, because I'm drawing it with, like, this as the shoulder, even though it might include this whole area. Maybe we should do that. It's about the same length, so you can see, like, there's not that much time left if it's going to work itself out that way. It should be finished by... Shoot, I guess in the next 12 to 13 minutes, you'll probably see that kind of finish out. It's, again, on average. It's not like it has to be right then. Oh, no, if he's not right. No, because, like, a head and shoulder can also be really complex. And sometimes you might work out one part of it and the next part's ongoing, and it's kind of like more choppy and it takes a lot longer and doesn't always kind of replicate perfectly. Yeah, that complexity. But I would say it's roughly around here where you might expect right here to see that price action change. Yep. AMC just chopping along. It looks like it's having a little bit of trouble around 482. Kind of a double top there. You got 481. let's see here. No, 479. Let's see, high 42, 42. Yeah. So it's double rejection right there on those two little 6-minute wicks. I also got diminishing volume coming off the top. That's not necessarily a bad thing. So that could indicate that you might be just doing a little pullback. You just got to wait and see who wins out on the advancement. It did make a new low here, so it pulled back farther. So that's a potential sign of weakness. So the auto reaction came down pretty low. It came below this preliminary supply drop. So something to keep in mind when you're kind of building a range. Like if this were to continue down, where's the next one at? It's back here at like 474. I think that was close to one of those fib retracements. So it makes sense just to consider it as you go forward. Yeah, 474 was right around there. So to see where a range might build out, you know. So if we were to like reject here and head down, 474 seems like a logical place to possibly pick it up and try to build a bigger range if it's possible. But how do we advance, Booksy? I don't know, man. It's a Friday, you know. Are we going to 5? Are we going back down to 450? Well, we're closer to 5 right now as money goes. I mean, we're only 20 cents off. Actually, we're 18 cents away from 5, but 450 is not far either. It's still only like 30 cents off. So I'm shrugging my shoulders. It's kind of like, I don't know. I could see how this could turn down and just piddle out. I can see us coming back up and forming some kind of distributive top that makes you think it's going to end at 5 and still piddle out. I think ending at 5 would be strong or stronger. And if I were going to keep people in the dark on the Friday going into the Monday, I might end it at 5. Because if you end it right here like 499 or something, it puts you in between these two creeks we were just talking about. It's neither like a confirmation of a move, nor is it like a confirmation of a down move. It's sort of like in the middle. What do you mean? You said that was confirmation. No. I said the yellow was confirmation. This yellow region is where you ultimately want to go. The blue region is just more like support, right? And then the yellow region up here is confirmation. Because in a distribution, those up thrusts will get weaker at the very end. They'll start looking like an LSPY, which is like those choppy moves up. So yeah, even still, I know you guys hate me for this right now, but even still, if they ended the week at Friday or at the top here, like technically Tuesday could be some kind of weird choppy down action as well. Like there's nothing that prevents that from happening if the top here forms distributive like, which is kind of what happened here. Like it went good until the end and then it dropped, you know, sort of finished off in a distribution. So you'd still have to watch it going into next week if it went up to 5. I guess closing above max pain, going up into 5 would feel more bear or bullish. And I've mentioned that a lot of times the Friday price action is typically continued into Monday. But man, I'm telling you all at the same time, if it goes up here and it's looking bad, I'll analyze it. And if it looks bad, I'm just going to tell you it doesn't look great. So, and we're still in a big upward channel, like even all the way up to 543. So there's still a lot of problems right now. If we were to end the day at max pain, that's a lot more difficult, I think, because I think to me, like that's kind of an indication of a breakdown. I mean, there's a throwback to that from this move. We busted out right at this is confusing too. That's a hidden divergence on the 6-minute. Whatever. I'm looking back here. But yeah, that would be like a full throwback from that move on Wednesday. It's possible. Like, neither seems unlikely to me. I don't know. Both seem like they could give you like a nice solid cliffhanger for the week to come. That one's kind of, yeah, more or less like just a break. It looks just like a breakdown to me. So anyways, I don't know what's going to happen right here locally, but yeah, that would stink, huh? Man, your operators are really good at teasing out, what they want to tease out. So to me, it looks like it's rejected and it's probably going to head back down to 450. And I'm willing to venture the guess that this very final creek, I didn't really draw it, but it probably won't hold. I don't know. I've been really backwards this week, so who knows. I'm going to look at one more thing. I'm going to look at a full-on... Oh, yeah. No, it's that marker, too. It's the same one. That's interesting. So it's a full, 50-50 around that downward. This is the fan that we talked about. It comes all the way from the top of the move, the big move, all the way down through here yesterday. And that's like your little distributive action along it. This is a jump over it, but then if you notice the retracement, so this is like a perfect 50-50 across that. I don't know if you want to call it a creek. It's really more of like a fan resistance, where you're generating resistances or you're pushing away from a top. You're kind of generating new trends and stuff. So this is a jump over that. It's kind of fascinating because if it were to come down and hit that and then pitter out, that's a good cliffhanger too. That gives me the sense of uncertainty because it looks like it hit that creek already. Kind of looks like it might hold, Then it can have a sufficient rejection into the end of the day. It could hit lower too. It could hit down here. Yeah. Well, we're in a sticky spot. It's not looking awesome. There's a few people out there that are still really bullish. I can see I can see you guys fuming. I can feel it. As some folks will have rightly said, why are you, don't don't overthink it. Just kind of go with what you started with and this and that. But what I started with was uncertainty here. I mean, I started with we're entering a stage of problematic price movement. You have one example that leads to these eventual all-time highs, which is like that January thing. In our case, it may not lead to all-time highs, but it could lead you to a move to like 20 or something. But then another situation there is that March setup where you have a very similar move, but then it distributes and goes really low. And for me to predict it is difficult. But the institutions that be have already knocked it beneath where I would consider like a more one-to-one area. On the same time, like there's some things that have held. Like, so I was talking about how it's already like kind of too low. It's beneath the 50%. I didn't like that. But then it held like these support lines on this one trend. And that kind of makes you wonder. A lot of this seems to be working it out away from that support, like pushing up to get sellers to drive it back down through this support, which kind of bothers me. I don't like the upthrust motions with very little to no follow through on the side of buyers. Not a big fan of that. Not because it can't be bullish, but because in this particular case, these moves are such massive swings that it's generated for itself basically a bear flag. That's a little different than like an ascending accumulation, which typically, until the very end, makes those higher lows are very strong LPSs over creeks, So we've had this kind of back and forth since we started here because I was like, well, there's two completely opposing examples of how a range like this could either bottom or redistribute. And lo and behold, those two are probably the most confused of all Wyckoff schematics. So I was just making that concession first thing this morning because I realized that the reason that I flip-flop so much is because there's not been consistency. Like, you don't have the consistency of accumulation in this range, But all the same, it's hard because you're watching these higher lows and you're like, well, I don't know. Could still turn. At the end of the day, I mean, people are talking about like the T1 stuff. People are talking about Opex. There's all kinds of things that'll play a factor in this. I'm really just looking at it from a technical perspective as a possible bear flag. That's kind of where it boils down to is like, well, if I'm wrong, then if it's not accumulation, then it's just a bear flag and you're just going to get continuation. It's not really that complicated, it's pretty straightforward. And since I've been leaning towards that a bit, I'd rather be surprised and have it be accumulation in the end. So my flip-flops have been mostly about whether this could be an SOS. And I think if it breaks down, again, we talked about this quite a lot, but that 446 is such a critical level. And I don't think it's going to break it this week. I don't think that's likely. But I think you're likely going to see a a retest of 450, which is like a full-on retracement of this. I know I've talked about that change of character a lot. But a change of character is very... even just saying that, it's such a difficult thing to describe. What the change of character tells me is either it's not just a change of operator. Sometimes that's the case, where you get a brand new operator. It's usually just that the patterning goes into a different mode, right? We can call it that. It's where you think there's going to be a distribution and then all of a sudden something changes with the volume. And that can happen. It happens in some ranges and places where you'd expect it to happen. Like if you're anticipating like a news break, sometimes that can cause a change of character. It can. Sometimes it's an operator changes their mind about something. Maybe they perceive the news differently than retail does or whatever. And then it can look like an opposite kind of change from what you might expect. I'm not in the business of predicting that, because you can't predict news and a change of character as a result. But usually those are kind of hand in hand. And at least for AMC, the only time we've seen kind of changes of character are like late in the range, when there's suddenly like a news drop or something. And then you might see a really strong change. There was another place in like February of, was it 2022 or 2023? I don't remember. I remember it was that February run up, and I think it was 2023. And because it wouldn't have been this year. That was just a minute ago. But it was in 2023. There was a distributive top that then dropped below the range, and then it had a change of character, and then it ran all the way back up again. And that happened. It happened at the time. I was still doing some live stuff, and maybe not live, but I was monitoring it, and it happened. And so there's times where a change of character can occur just beneath a range, for example. Like it may have a distributive range and then has a sudden change of character right after it drops the range. So you look for those moments as possibilities, but I don't really see it very often on AMC. And it would not surprise me at all to take advantage of, one hedge fund to take advantage of another or whatever, cause a run up like this, and then to just sell it off and try to bring it back down again. I mean, it's happened before. So that's why I'm not overly confident about anything at the moment, because I'm not convinced of it yet. And maybe that's for the best. I think it's fine for you guys to have a stronger opinion of up or down here, but I don't think you really want, at the end of the day, and I can't tell you, tell me what you want, what you really, really want. I'll tell you what I want, what I really, really want. I want. Sorry, guys. I can't tell you what you really want, but I think it's good. I think it's good for a YouTuber or somebody who's on a stream who's talking about these things to not be way too bullish or way too bearish. Because when they influence people. If one is very bullish and sitting here saying, you better get in or you're going to miss out, you're going to have people FOMOing into potential disaster sometimes. And if I say, it's definitely going to drop here, guys, you may miss an opportunity. What if it doesn't? And it does build up support, It's much better for someone who's streaming these kinds of things to, and this is where I've come to, is like, it's better for me personally as a trader anyways. So like on a personal note, it's better for me to think about the market this way. But I think having like an audience, it's better for the audience to have those confirmation targets as opposed to having 100%, like I'm 100% certain, Yeah, okay. And then if it doesn't go your way, lots of people are angry and you screwed over people. And some people will be like, oh, well, it was our choice, we made the decision. Yeah, but that person was still influencing you. Like you were listening to them. Subconsciously, you're thinking their opinion has a lot of validity. So anyways, yeah, so this didn't hold. I was right. It was probably not gonna hold here. And it did not. Yeah, there's not been a strong enough change of character here for me to say that it's definitely accumulation. I think it's been more or less very distributive since at least about Tuesday. There's a reason why I'm saying that, though, and the reason is that these moves, especially this Tuesday move, it just seems really anemic to me. It seems more like a short covering or something, and then swapping out positions, and then this kind of seems like a secondary action on that. And the volume there looked so good that I was like, it took me back. Like, whoa, well, maybe I'm wrong. But on the whole, like high volume tops like that, pushing above the range and then coming back down and constantly like closing beneath it, that's not really a good sign. And in accumulation, you have a lot less of that garbage going on. You usually don't push the range till you're ready to go. Accumulation tends to be very contained. It tends to be like very boring, like you have a lot more downward motion. It's very contained until the last minute, and then it pushes out. You very rarely have, I'm pushing the range, and then I'm going to break out still. Like that's more typical, that kind of violence, if you will, is more typical of a distribution, which is why I've been much more bearish than bullish looking at this setup. We just haven't gotten confirmation of that. So you can have that opinion, I can have that opinion, but until you get that confirmation, there's really nothing I can do to say like, oh, it has to be this or it has to be that. We could see this chop all day and end the week at 450. And even then, like, yeah, it looks like it broke down, but I'd still be like, where's the 446 break? And that probably won't happen this week. And same with the upside. Like you could go up to 5 and I'd be like, okay, but we still haven't gotten a move back to the top here. And those things are very difficult as a trader to wait for. You just have to wait for them. There's really nothing to do. And we've grown quite comfortable, it seems, today in our initial move. It seems like, on the Russell, this got this 1% move to the upside. It looks pretty good, but it's kind of just chilling. There's a gap below. There's another gap below that. MPW sitting at 0%. It looks like it's running itself into a corner here going into Tuesday. It's just in a mess. All of these things are probably going to back themselves into a corner by the end of the day today. That's the nature of Fridays often. So it'd probably be better for me anyways, and for you, to like take a step back and then come back on Monday. I know the market's not open, but come back on Monday and just kind of observe it again and see if kind of a fresh set of eyes sees it differently, So there was that move on GME. This is about what I anticipated here. I didn't quite make it. So we could see more down. It didn't quite make it to that creek. I think it's a little bit lower. So I felt like it may not come far below 790-ish, I think is what I said. I was talking about this particular level. But there are a couple other bottoms at 1780 and 1780, 81. That's all the same. 1780, 1770. What's FOMO? FOMO is fear of missing out. It's where usually it's generated because you can generate it yourself in and of yourself. You don't have to have other people. So it can just be a sense of like, I don't want to wait. I want to get in because I'm worried it's going to go without me. I'm worried I'm going to miss the move and miss the opportunity to make money and all this stuff. That's often not how it presents itself, though. It's not usually your own thoughts, though there might be some of that. It's usually because of other people. So in the AMC community, there's people who will actually just trash talk you if you're not bullish all the time. There's people in the GME community like that too. Though I've found that GME folks tend to be more reasonable. AMC folks tend to be more fanatical and it's not talking about anybody here. I'm just saying it's a very big generality. But there tends to be a FOMOing attitude, which is like, you better load the boat. And it's typically like somebody's found something that they think is really big, and they're like, oh, I got to tell everybody. And then people start telling each other like, oh, well, there's this, you better load the boat, you're going to miss out. And you get this sense of like urgency, and typically there's no confirmation, and it can be something like this where it's like a false break. So like a head fake, or just even just an initial move where you think that it's going, you're going to miss out. So you start buying in too early. And this is the moment when institutional sellers are, taking their shares and handing them off. That would be strong hands into weak hands in a supply, because they think that, well, they're not going to take it up anymore. So they like FOMO. Institutions love FOMO because it makes people buy in at like highs so that they can sell. I mean, it's kind of market manipulation 101 for them, for bigger institutions. The reason I pick on institutions is because they have a lot of money. If there was a guy out there who had $1 trillion, he could be an institution of himself because he could manipulate the price action. As retail, you can't do that, but institutions are very good at playing that market. And they know that FOMO generates this kind of feeling of, I'm going to miss out amongst, well, what FOMO is the feeling of missing out, but that retail often generates that feeling. And retail is just the everyday trader. Maybe Daro. I don't know. Oh, it's in your name, full FOMO. Yeah. So the thing is like some folks, they think about it more sarcastically, like facetiously. They're like, FOMO, and they're joking. And then other people are not, they're really not joking. Like I remember one time we had a guy come in here. I just asked him to leave because we were basically at a top. And he was telling people that if they didn't get in, they were going to miss the move of the century. And I'm like, dude, we're at a top. Like the technicals don't support that at all. And I was telling him that like, there's just nothing, like I can't see that. And you're not providing any evidence. He just was saying, get in, you're going to miss out. I joked about it for a while. I think his name was JT. I remember we joked about it for a while. But it was like, not in a mean way, but just like, why? Why would you do that? I don't know where that comes from. If it's not a desire to help people, which it could be, I just don't know why you would want to come in and mislead a bunch of people. And there's been a lot of weird conspiracies about bots and stuff. But even those are kind of backwards in my opinion. Those conspiracies always have it wrong. Like, there are all these conspiracies about bots and stuff, and I'm like, well, a bot wouldn't, like, that might be a bot. He might be somebody that generates FOMO. He's not somebody that typically comes in and tells people to sell. That's just somebody that's being bearish and just wants to troll other people usually. I would think that a bot would be more of a manipulator. Is that the way people describe it anyways? Let me put it this way, is that a short seller, a short operator on these stocks would benefit from people selling, but ultimately he doesn't really want to share short positions. So he wants other shorts also to get kind of screwed. So it does him a greater service to be able to continually offload shares and to continually short if people buy. So, I mean, it's complication in the way you may think about it, but it's not, it's actually kind of simple too at the same time. It's like, it's backwards from what some people think. Like they think, oh, a short seller, he just wants everyone to sell to help him drive the price down. Well, he wants people to sell at a specific time, but in these sideways ranges that we've had over the last few years, there have been many of them. He really wants people to buy because he wants to load up on his short positions at a higher price. He wants to sell his shares, back into weak hands. Like, they thrive off of the bear flag, you know what I mean? It's their opportunity to get out of short positions and to reload. It's the same thing to the upside, People sell at those bull flags. They sell and then they reload. They want sellers to think that it's going to come down. You know what I mean? Does that make sense? It's not that simple either, because it is simple, but it's like even still there's more going on, because they have the ability to use the options chain, of course, to manipulate the price action. They can use what we were talking about earlier, like swaps and stuff, but they also can use the loaning of shares. And we know that AMC's had people buy shares just to loan them out. They buy at high prices, which doesn't make sense to us, but then the stock is shorted for a year and you're like, oh, okay, well, maybe it does make sense. They're increasing short share availability, making money off of that. You're talking about derivatives, you're opening up like a whole nother conversation. So there's not that much to overthink there. It is what it is. If you think about it, it's probably happening. Like, I really believe that now. I'm like, yeah, it's probably happening. There's kind of an absurdity to the market in some ways. They're just making money, left and right. Yeah, they want you to buy high and sell low. I'm not beating up on everybody who's been in those YouTube groups. I don't think that there was. I think they were drinking the same Kool-Aid, you know what I mean? So that's not to turn them into victims. I don't think they were kind of victimizing themselves though by believing the same things. Like, I think some of those folks genuinely believed it. And you can go back and look at the TA and stuff at that time, the first few months after June, and just everything was so bullish, It couldn't possibly be bearish. And that's part of the FOMO, And the institutions rode it out till November. They got to sell all for 5 months into retail. It's crazy if you think about it, but that's because retail was so convinced that it was going to continue. So I don't know. I don't feel like it was malicious, I guess is what I'm trying to say. I really don't. I think there was just a lot of ignorance. And I was in that group of being, somewhat ignorant. I think most people at this point, if they've held stocks for this long, most people are not like, I'm holding this stock because it's going to go to the moon one day. There is some of that still, but I think most people are just like, yeah, I'm holding it because I thought it was the best thing to do to cause a squeeze. And they're not wrong, but they just got in too late. Like, they got in after that move had happened, and then the rest of it's all retracement. And it could happen again if something similar happens again. And now we're seeing another 300% move. And it's the same thing. It's like right now, somebody said yesterday, right? And we don't know. Maybe next week it goes back up to 5 or 6 and then goes up to 7 or 8. And you're like, okay, well, we're back up into this higher range. Now what? But it's interesting how these kind of people that have not been around for a long time all of a sudden come out and right around these big moves, and then you suddenly get a lot of retail interest in these things again. Oh, AMC was up, to $11. Wow. It had a 300% move. Whoa, maybe it's doing the same thing again. Maybe. Maybe it's not over. Or maybe that's feeding the narrative that they want you to hear. Because, and that's the change of character business all over again. Because this is the time where FOMO gets people hurt if you're wrong. Oh, it's got to keep going. Well, even I said maybe we get this retracement. Could happen. But I don't think that's a guarantee that it's going to keep going. I just think it could be a potential, larger range. And if it doesn't happen, it doesn't happen. We're heading down to 3, That's kind of it, for me there. I'm not going to talk about going to 3 and then coming all the way back up. That, to me, is too far off at this point. I can see the potential retracement back to the 618 or the 786 here as a valid option. Maybe even just 0.5, back to 7, basically, before maybe deciding what to do next. That to me makes sense. If you're going to try to even if you were distributing here, I could see that as a possibility. Another move back up, another effort to redistribute. That makes sense to me. Which is why this region I've been very back and forth on, because I'm well, the redistribution makes sense because if you're going to go back down and check the creek, this is a halfway point, and then you're going to head down low and check the creek. So it's kind of well timed. It's well placed. There are some things that definitely support that. The FOMO would definitely support that. But at the same time, I'm I don't know. I mean, it's a huge move. There's a lot of volume in it. I could see it being a way of kind of screwing over both people, both shorts and buyers, because you could have it linger, and that really messes with everybody if you linger it longer. It's not just a one and done kind of move, up and then down, all the way back down. Instead, it would be up and then down and up again. And that gives you a lot of time to kind of sort of mess with people, set up more stuff, trade more at these levels. And I could definitely see the short sellers even here covering, and then they still take it up, because if your buyers who bought here want to sell higher and they weren't able to sell all their shares, on the way back down, then sure, why not? They could take it back up to 850 and sell off again more of their shares. And this is giving them a chance to kind of buy a little bit more. And short sellers think, oh, it's a redistribution, it's going to continue down, and maybe they're reloading, and that helps the operator bring it back up when they have to cover. So it's they get the FOMO and the short sellers covering, and yada, yada, yada. I mean, the thing about that January move is that first move is not, it's not enough. The first move by itself is an SOS, but it's not until it comes back down in February. And even then, it readvances, and you still don't know for sure until that reaccumulation forms. The next 3 months after that were the most important. Probably the most important 3 months for AMC, because aside from the ones leading up to the January move, that's what defined the rest of the movement on the stock. You don't have, with the January move, you have zero assurance of that massive push up and that pullback. There's no assurance at all that it's going to continue. It could have just crashed and burned. That's when the operator stepped in and said, yeah, I think we're going to take this up a lot farther. There's enough people here. There's enough buying pressure here. It's probably somebody like BlackRock was all right, we can take this up and play with this and bring it up even higher. We've got these targets from 10 years ago we can use, or whatever it was, you know what I mean? We've seen those targets. We can use that. We can make this happen. There's enough short selling here. There's enough buying here. We can drive that price up. But for us, like on the retail side, there was no way of being confident. I mean, in my opinion, there's no way of having any assurance until that resulting reaccumulation happened. Because it could have been like March where you get this big move and you think that that's a move, but it really was just a massive upthrust that's being used to bring in sellers and drive the price lower because they were exhausted, you know. Those things they're actually really cool in some ways. Like you think about it, it's like really interesting. Maybe cool is not the right word, but it's really interesting how that level of manipulation can drive like an entire movement, basically. But it's also frustrating, you know, from a retail standpoint because you're not the operator. And Stockfathers talked about it like this. It's like basically you're holding. It's like you're playing against the house, right? And you're holding your cards, and you might have a good hand, but at the end of the day, like the whoever's running the table, like they have all the cards. You know what I mean? Like they're the ones that know. They kind of know everything. So you're looking palely through a frosted glass window, right? And they can see everything really clearly because they're the ones driving it. Like they're driving the price action, and it's very, very, very rare to catch an institution off guard in that regard. And we know that there were some that got really burned, closed their doors, right? Because of GameStop. And that was such a huge market disruption for that reason. But we don't have any element of surprise now. This has been going on for years now. Like, there's no secrets anymore in that regard. And we've had adequate amount of time for institutional traders to change sides, basically, if they want to, or not, if they don't want to. So I still can't understand the argument, and I don't really want to get too much into this either. I know it offends some people, and kind of ticks some people off. I just don't understand the argument that they're still somehow trapped or they're still somehow in trouble. Like, it makes zero sense to me. Because I'm like, as soon as that January move happened, those are the guys that got screwed. That if they got screwed, they got screwed there. Like, I don't see anybody holding through the rest of it. And at that point, the rest of it's pretty easy to see. If you're looking at AMC, it's like, yeah, that was a reaccumulation. Like, they knew it was coming. It wasn't like a second squeeze that was out of left field. Like, everything from there forward is very, in my opinion, is very predictable, you know. I'm not saying that there's no hubris in institutional trading. I'm sure there is, and I'm sure that sometimes that hubris can get them really in trouble. But I remember I measured out the moves percentage-wise. If you had invested like $100 in AMC and you got all the major swings from tops to bottoms on just the big picture, not even like the small picture, but like on the big picture, you don't have to hit everything. It was like a 60,000% increase year over year. And that's not even how institutions trade. Like, they don't go all in on every trade. They have hundreds of people making small trades, you know, like 1 or 2% per day or whatever it is. And that's it, you know. And so it's a weird kind of, it's weird to me to think that somebody might think that there's still shorts trapped who are not like new, but that somehow they've been in it and they've been paying on these short positions for 3 years. And I'm like, I don't think that's even possible. And even if that were possible, and I understand the idea of failure to deliver is like kicking the can down the road, but even if that were possible, what prevented them from just opening new positions and shorting it down again? Because they would have made all their money back, probably. Like, you know, I just don't get it. It's moved more percentage now to the downside than it moved to the upside. You know, if we're talking about just up and down. So GME is a little different. It's never fully come back down, you know. But I also think GME kind of shook out those big shorts early on. I mean, the players that got burned, and they were done. You know, I don't think there was a lingering effect per se. I think there's an effort for a lot of folks to just watch the stock die. There's still a lot of negativity around GameStop. There's still a lot of people out there who are talking heads who talk about a dying video game supplier company, you know, who have zero faith in it as a business. So yeah, I think there's still the narrative and there's still the fundamentals and all that stuff still at play. And AMC's never really fully corrected its fundamental problems, right? It's done a lot to help and it's definitely improved over the last few years. Arguably, it's improved quite a bit, but it's not ultimately fixed the problems that shorts have had with it. So, anyways, that was a fun little talk. Not really sure why we started talking about that. I think I was talking about FOMO. But it's good to kind of remind myself every now and then that, like, this is a big play. There's a lot more going on here. And it may seem simple at times, but it's not always super simple, you know? Like, there's a lot going on. And it's long term. And that's the other thing. It's a really long term play. I don't think we do ourselves any service by considering only the short term on this one. Could this be a spring? Yeah, I don't mean to start a fight. So some people are going to think that there's still a bad situation. I think there's bad situations for shorts. Like this recent run up was a really bad situation for shorts, right? We could all agree on that. Because obviously when it runs 300% the opposite direction that you're expecting it to go, that's bad. But it also was a huge amount of time, right, that gets erased. The same thing can be said about that January and June run up. Both of them were still not great for shorts long term. If you were long term shorting a stock, which, you know, is first of all, it's kind of weird to think about, but like, because you know, you're paying for that position, but like, sure, like paying interest on that position. Sure, you could be in a bad situation. And then the concept of like naked shorting and again, like over leveraging and all this stuff, that's true. It does happen. But there's always like loopholes. And we've already found over the last few years, there's like many loopholes that can be used. Swaps, we were talking about that earlier. If you watch that video, you'll see what I'm talking about with the XRT stuff. That was a good one. But it's like, there's a lot of theory, I think, in that, but it's also kind of true at the same time. There's a lot of ways to kick the can and not have to pay the piper, you know, for the positions. I'm not arguing about the original buy-in. Good club development. You've got I don't think you have any argument for me about the original move in January. I think that there's a lot of interesting technicals behind it that make me question whether it was really truly random or if it was like a calculated possibility, and that there was definitely always a chance that was going to happen. The one that really gets me for GME is the historic cat ear line. And that's not one that you can, timing wise, there's no way that it should have worked perfectly with timing. So that's the one that really gets me. The others are not, like the AMC one doesn't really get me because the AMC one points to the June move. So it looks like an after the fact kind of thing. Like you could have an institution look at that. It's easily explainable. Like an institution could have looked at it and been like, all right, well, there's a historic marker here, a target, let's go for it. The GME one's different. The buy button removal happens on a cross-section historic target, which means that it was timing-wise also semi-predictable. Seems very unlikely that it would have hit that. I would give you that much, but it was definitely a very, very, very improbable hit if it was really random. But I still would agree with you that, like, sure, like obviously the fact that a hedge fund was put out of business because of GameStop, I don't think that that's a small thing at all, you know? And I don't think from a technical perspective, or I don't think from a fundamental perspective, either one should have run, you know? So I'm not arguing with you there. I argue with the concept of like that they're still somehow trapped 3 years later. I don't think that's reasonable given the percentages that it's moved. It's like saying that they've done nothing but sit on their hands and waited. I just don't believe that. I think you pretty easily could have mitigated any losses at this point and then made some money too. And there seems to be a concentrated effort, at least on AMC's part, to really drive the price down over the last few years. And they've used every kind of possible source of good news and they've turned it into really bad news for retail. So it seems very clear to me the short operator is still very much in control. And maybe long term, we're going to see that the bull operator had a bigger plan for upside, but it's not retail doing it. I don't believe that. So why do people say that they'll both reach 1,000? Yeah, well, the problem with the 1,000 per share is a concept. Okay, so the reason that comes about is because the concept of MOAS, mother of all short squeezes, it's already improbable, right? And the reason that it's so appealing to people is because it seems like a no-win situation for the shorts. Like it seems like a situation where a short seller would be in dire trouble and basically go bankrupt. So if you don't know what I'm talking about, you probably do because most of you have been around this community for a while, but this concept of going to 1,000 a share is that if you buy this stock and you hold on to it, if a short squeeze were to happen, and in theory, if you owned, let's say you own the float 5 or 10 or 20 or 30 times over, okay? There's all those shares. In order for a seller to get out of their position, right, they have to buy back their shares. So they've opened a short position. That the idea is that they can continually short it beyond 100%, meaning they're shorting it beyond the shares actually available. That's what the concept of synthetic shorts is. So those aren't real trades happening. They're like made up trades. Like they're not really pairing a buyer and a seller together. Instead, they're just allowing them based on collateral to open a short position. Like, I've got, or in a lot of cases, the options chain, right? I've got this this contract, options contract. That's proof enough that, you know, we've got access to these shares or whatever that I'm shorting. Because you're supposed to not be able to sell unless somebody else is buying, right? You're not supposed to be able to buy unless somebody else is selling. But in the case of naked shorting, the argument is that they're shorting beyond what's available. So that's what's causing some of these stocks to basically go bankrupt. Okay? So if you have like millions of these naked shorts out there, meaning that they're not paired with another order and they're just kind of made up, then if during a short squeeze your position is reversed, right? And all of a sudden you're like, crap, I was betting on this thing going down, now it's rocketing up. The only way for a short to get out of their position is to cover their position. So in theory, they go and they try to cover their position by doing what? Covering means you buy back. So for short selling, you sell at a higher price and then you buy back at a lower price, in theory, right? That's how you'd make money on it. And you can go and look at short selling in detail if you want to see like a play-by-play for how that profits you. But in theory, if the price is running up and you've got millions of these shares that you have to now buy back, you're supposed to have them, right? They're supposed to have them on hand, but they're not actually paired with anything. Who are you going to buy that from, right? You have to buy it from sellers. So the idea of a short squeeze, and the mother of all short squeezes, is that as the price is rising, if nobody's, in theory, right, if nobody's selling, and that would have to also include a lot of institutional sellers, because institutional sellers, they might like a squeeze, but ultimately, like, that's never their goal, I don't think. I know that Stockfire and I talked about this too, and it doesn't make sense because there's too much risk associated with it for an institution. They're not usually interested in making thousands of %. They'll do that over time, but a long time. So I wait for them to like protect themselves. And that's why the ones that went out of business, they were over leveraged. They were not doing what they should have been doing with GameStop. So they got screwed when the price started to rise. If people are not making their shares available by selling, then I can't buy back. So it's a double problem, because the only way for the short sellers to get out of that position is to buy, which drives the price up. But if there's no shares available, and this is where you get to that days to cover business, because days to cover is really important in this whole scheme, because days to cover is how long would it take you to get out of your position based on the current amount of shorts in the play versus shares available and all that jazz. If it's way high, you're in trouble, because as the people are buying and it's taking you, I don't know, let's say it's like 4 or 5 days to cover. That's a really long time. If it took you 5 days to cover your position, that's 5 days of buying that you're going to have to endure. Meanwhile, if retail is just buying and holding the stock, then they're not selling it, then they're just adding to that upward pressure, right? And what happens when, with supply and demand, what happens? The price inflates, and you basically have a problem of a short squeeze. It's not a problem, but it depends on which side you're on, I guess. But then you have the short squeeze. So the idea of the mother of all short squeezes is that essentially the price would be like, in theory, the price is like infinite. It really is. It's infinity. But like what other folks were saying is that you basically would break the market, because and that's why they think the buy button was removed. And a lot of people will argue about that, because it's like a domino effect, because the leverage in one stock affects another, like the leverage that you have against your short positions, all these things. So the idea is that you'd have to start liquidating everything. In a real mother of all short squeezes, if it really went like to infinity, it's not that it's not provable, but mathematics, infinity is a real provable concept in mathematics, but doesn't mean like in real life you ever actually get there. So I'm not talking about, when I say in theory, I'm talking about the human element. I'm not talking about the mathematical element. The mathematical element is spot on. The human element is absolutely not spot on. So that's the problem. That's the theory behind it. When I say in theory, I'm not talking about the math. The math is there. It's just there. It would cause cataclysmic problems if it were to happen. And that's why we're pretty much 100% sure at this point, pretty much, that is the reason why the buy button was ultimately removed. It wasn't a question of Robinhood not being able to do this or that. It was probably a backdoor kind of, you need to do this, pull this plug now, because all these companies are going to topple. You know, it's going to cause a wave. And there's all kinds of videos about it. Okay. What's not, the reason that I say it's a theory is because you're relying on other people. So the in theory part is that part where I said everybody just doesn't sell. Well, there was a lot of people selling when we were up at the top at in the 70s, you know? So institutions were part of that selling. So the problem isn't just retail related. That's what I get at. Is like, I don't see how that's not possible, you know? And the idea is behind the mother of all short squeezes is they would have to buy back the shares. So they don't have a choice. But honestly, by the time they hit a certain price level, like most of those companies are bankrupt, you're not going to get a payout. And that's where the problems really start coming in. It's like, where does that money come from? You know, this is what I'm saying. Like the MOAS it's, I don't care if it's a broken system already, it would definitely break it. Like there's all kinds of issues. Because if a short seller goes bankrupt, they can't pay you for those shares. They're just done. They might lose all their money and pay it out. And that's the concept that I think a lot of people have gravitated towards, is like it's some kind of a revenge plot for 2008 when banks got bailed and people got screwed and all this stuff. And that's how it turned into a greater narrative, because you have folks that are like mad and they're angry with the financial systems, and they see it as, I'm taking that back. Some of that's maybe valid anger, but at the end of the day, if you really want to steal and take away millions and billions of dollars from hedge funds, I imagine a lot of people involved in that are just kind of greedy, like low key. And we heard all kinds of fun stuff when it was going up. Like, oh, wow, retail's going to do so much good with this money. When they hit these billions of dollars, millionaires are going to be made, and then they're going to help other people. And, you know, because humans are so good. Humans are, you know, incorruptible. I mean, the mom and pop are incorruptible. Like, they wouldn't do anything bad. And don't get me wrong, I 100% believe that there are a lot of good intentions out there. I think a lot of people would use it for good. But I think there's just as many people out there that as soon as they got a couple $1 million in their hands, they're going to blow it all on stupid crap. And they're not going to help their neighbor. They're not going to help their grandma or whatever people are saying. Other people are saying. It's a mixed bag. And that's where I take issue, because I'm like, look, dude, the guy who's looking for a Lambo, who's just like, I'm just going to have a Lamborghini and live in luxury the rest of my life, he is not the same as the guy who, or gal, you know, who their parent has gone through chemotherapy and they had a heart transplant the year before and they're millions of dollars, you know, owed. That's a very different kind of outlook on life. And like, so as that price is running up, you know what I mean? The impetus, the idea of like not selling is going to be very different for those two people. Very different. Which is why I think ultimately it failed. I mean, it did. I don't care what anybody says. It failed. it got to that $70 market price after the buy button was removed. At that point, institutionals sold until retail buying was exhausted. And then that was it. And he took it down. In UK, they reserve a whole day's worth of trade because someone important got the raw end of a short squeeze. India is going to same day settlement. Yeah, that's cool. Not gonna lie, the biggest of the retail movement just gave up on this. Targets would be huge, like $600 to $800. Yeah, but there would be a top, and that's what I was trying to get at, is like the theory behind the infinite move, and it would be. I know that people have talked about 10K or whatever, but it has to do with liquidity and across the whole market and stuff like that, and how many shares people have and what the sellouts would be. I think there's too much there to ultimately come up with a real number, but whatever. What do I know? Like there's too many unknown lurking variables, as we call them. Those are things that you think you know, but you don't really know. We also don't really have any true information about shorts. They don't have to report their positions, so there's always going to be some speculation there. But the other issue is like people selling, and I mean, I think that once you hit a certain price, people are going to sell. And you look at any short squeeze in history, they're all pretty awesome looking, but they all have a top. I mean, people just started selling back off. So that's all. Anyways. You might be right about that, Yunhua, because like there's a decent chance like after that 2 p.m. marker hits or whatever that you start seeing some movement. We're in a position right now, we're pretty low on this flagging action here. And if it were to break down to 450, it's not a great bear. It's really a bear sign. It's like scat. Yeah, I don't think that it's unrealistic that we could see a move to 5 even today, though. I mean, it's a possibility. It's just that either one of those doesn't really give you everything that you need to know. And I think going into Tuesday is going to be a bit of a dicey situation regardless. So GME is a little different right now than AMC. I'm seeing it as a possible reversal here. I mean, I talked about coming down low, maybe getting to a little bit of a spring action. At this point, I feel like it's already dipped beneath 1781. No, it did not. I take that back. It only went to 1780. So it didn't really have like a quote unquote spring there, but it didn't need to do that. It only needed to come beneath 1793. So it could have formed out here as a way to jump the creek. And then, here, I'll show you what I mean. Timing wise, we were right about the movement. So we were right about where that happened. So we probably see a movement down here into some kind of a bottom. It's going on long now. So the rest of this to me looks like an attempt to work across like creek levels. So this is always possible to do on these charts, is like fan it out. So you can see like this is just moving across resistances at this point. I do think if you get back up here above maybe around 1820 or so, that's where, again, you may see some end of the day price action movement that's more upside. It's still not out of the realm of possibility this distributes again. It's just right now it looks okay as an accumulation. So I think on GME you might see it go back up, and we'll see what happens. You could have a big rally into end of the day. It's possible. End up back at like 20 or something. AMC, that would have to look like us moving up to 5. I can't imagine it going all the way up to 550. But it's not, again, not out of the realm of possibility. It's just not as likely to me. Given how close we are to the max pain right now at 450, that's just kind of a stretch. So when I look at the widening here on the 6-minute, I know it's kind of a weird time frame to look at it, but it's interesting because you can see that it didn't go up again. So right here we have kind of like a center mark. It's pretty close, actually. You might be able to see this really clearly on like 15. It's pretty close to like right around the 50 too. But we have a decent center mark on this, and you can see at this one it didn't actually advance. So if we were to see that advance here, if you see that cross to the upside, there's quite a bit of space here. I don't necessarily think it would go all the way up, but you could see it move again, end of the day. It's a possibility. This right here, these two bottoms, that's really all of it. This going down could be considered hidden divergence, where your RSI is dropping but the price is rising. Kind of spits in the face of like this idea of reaccumulation though, and frankly it's a difficult one to prove as a turnaround, but it's not impossible. Again, I think that's the thing, is like I'm looking at it right now and I'm like, sure, if this made a higher low here, I could see it kind of heading back up to 5 end of day. I could also see it kind of coming down to 450 and really just seeing this like a double bottom down here. That could break your divergence. So like if this were to come down to 450, what that shows then is that you've kind of reset potentially on this move, because this would have to be, essentially this would be like a flat price movement with RSI, not being flat, but probably down. Does that make sense? So like, it doesn't take much to kind of screw up this situation where you've got a nice hidden divergence. I think that'd be pretty easy to twist it. And you can see on the left side here, this is a 1 hour. This isn't really much. It's like not something I would necessarily count on, because you have, you definitely have a possibility that this is just a holding before a breakdown. You surely would look at that and say, yeah, I can imagine if this holds, it could turn back up again. That's where you might get that secondary move up to like 850. But if it didn't hold, which is what we've been talking about on and off, is that, yeah, it looks like it just kind of drop like off here and go to, wherever. Back down to lower creeks around 4, and then possibly down to like the $3 area. So that's all. If it ends above max pain, and if it went up to 5, I would feel a little bit more bullish because of, this is where I'll flip-flop sometimes. So sometimes I feel more bullish if it goes down, because I'm like, well, it's not advancing too soon or this or that. In this case, I don't really want to see it break down here and go towards that 446. I just feel uncomfortable with that as a trader, because I'm like, well, it puts you in a really high risk of distribution. So that doesn't make me feel good. So I wouldn't feel as good going down today. If we went up to like 5 and we held it, I'd be more 50-50 on it. I'd be like, yeah, it could go either way and potentially be very good. And if it closed that high above max pain, 50 cents above, that's a positive sign. You're going to have more calls running into the money, and potential for hedging, it goes up, obviously, as it gets closer to that price. But those are things that like probably have already been dealt with anyways. I don't really think Friday is the day to kind of try to guess those moves. So we already saw it yesterday. Like as soon as it broke down yesterday, we were kind of like, okay, it's probably going to go into, it's probably not going to run. That's just generally what I think. On a Wednesday into Thursday, if you're not seeing the moves, I'm not typically thinking about it on a Friday. There's a rare circumstance here and there where Fridays have had some really massive swings to the upside, but most of the time, I mean, this move didn't happen on a Friday. This happened going into a Monday. This move, this Thursday into, Friday move was really bad. But most of these things is like, it's the opening of the week. It's where you get the most volume. So I have very little expectation that today is going to be super surprising. And I'll be surprised if it is surprising. But sure, like any kind of a push above or below max pain can have an impact on the nature of the stock movement the following week. I don't feel like it's ever as dramatic or as crazy, awesome, good, or bad as people make it out to be. It's always just sort of, all right, well, it's already set up that way, so it's just kind of a resulting action. The one thing that would make me really bullish, if you want to be like really bullish or really bearish, would be either coming up here to 550. That would be like a heavily bullish action in terms of max pain. I think it could have a greater impact in terms of options running in the money. And then vice versa, coming below 446. Like those things to me would have a strong impact. But at 450 or 5, I don't think it's going to be anything really crazy. Yeah, this is like a wind-up death trap right here. Gosh, look at that on the RSI. Look at that build-up. Jeez Louise. There's so much anticipation, It's like, ugh. I think this kind of move like this type of stuff is possible when you see that. I'm a little curious, if there's any other comparisons we could make to other ranges, but I've already kind of looked through those and I didn't see anything in the RSI that was pretty predictable. It didn't really look like the other two moves. Not really. If I have to pick one, I would have picked March because on the higher time frames, there's like a weird, it's like a depressing, I don't know how to describe it. It's like the RSI rose and then it kind of flattened out. It's almost like a head and shoulder. If you go to like the 4 hour. So the RSI rose, flattened out, and then it kind of headed up. I want to say it's on the, I thought it was on the 4 hour. Maybe it's with extended hours on. See, I can't even find it now. I don't know. So that's pointless to talk about. Maybe it was a smaller time frame. Yeah, I think this is what I meant right here. So there's kind of like weird, almost head and shoulder like setup on this. You see that when you look back at it? It's almost like head and then these are shoulders. So you might expect there to be another rise here on the other side if it's going to be kind of equal parts. It's just a thought. Could be. And you don't really see this. I can't really find this very readily in the January move. I see something similar to this in that March move, but neither one was worth really talking about that much, so I didn't really mention it in any of the videos because I didn't feel like it was very noteworthy. Let's take a look here. So last time I drew this out, I probably was just jumping the gun. You can see it's not necessarily like impossible that still happens, but it's very low. It never broke out here. So just too fast. Yeah, it looks like it may have jumped the creek there, so that's good. So there's a push right here over the downtrend motion. It looks like a possible reaccumulation too. It stayed high, stayed above that preliminary supply here, so that's good. That's usually a stronger range, you know, if it can stay a little bit elevated. Yeah, kind of a mixed bag, I guess. It looks either way. It looks like they're trying to maybe take it back up. So regardless, it looks like there's going to be a push towards this level. I think this is a all-time. I'm on HYMC, by the way. I think this is like an all-time. So this looks like a bit of a pinch point. You see that? Like pinch down, and now it's like breaking out. But on the whole, I would say it's probably like a M cross. So you might expect there to be an upthrust here, and then it's sort of like your cat ear structure playing out. So right here, I think that's an all-time trend deal right there. I would have to go back and look. Yeah, so I would expect it to push up to being over, I'm on the 1 hour, but whatever. If you drew this line to roughly where this kind of intersects the top. And then during that time, let's see where this goes. Let me get rid of, oh yeah, because this is already an M shape. That's the reason I drew that out. I don't know why I deleted that. Because this is already like doing that shape, so it's already made like the first move. I thought it would come back down and then make another one. So I drew it like this, where I thought it would just come right back up, maybe come across here. Instead, it stayed pretty low. So then we have the question, is that it? Maybe. Hard to say. Scaling wise, it could be either. This is not impossible. We just saw this on AMC like yesterday, where you could see it like shrink down and think it's over, and then, well, it wasn't. That's what I thought. So it could be over. We'll find out really soon. So I would watch really carefully 380, because I think if it breaches that top and slides down, it's probably going to distribute pretty low. It's probably going to come back to 283. And then it could end up coming back really low, because you have like a pretty low creek here. So you could see it drop very, very far if this thing distributes. It's not impossible. So watch that. Distribution here would take you probably really far back. I think this is like an all-time top though, isn't it? We talked about this. So maybe it would find support higher at like 280, but I kind of suspect, yeah, I'm coming to this exact same conclusion that I did last time I looked at this. So I'm kind of suspecting that it would probably go into some kind of a reaccumulation phase. And I suspected it would happen like way over here, but I don't know. It could be fast. It could be a lot faster than that. I'll be bullish long term if it breached like 5 or 6. That's kind of your next big level up here. You're kind of in the middle right now. You're in like the center of a previous range. So like short term, you could play some swings here, but I think you're working it out, and then we'll see if there's a range that forms. I could definitely see this being longer term sideways in this area before anything else. It would kind of present itself like an inverted head and shoulder, but I'm really just thinking about pushing this resistance and then probably heading back down to the creek. And, you know, again, I drew it really long-winded, but it could be faster than that. It could be like over here or something. It's whatever. Yeah. This will be a hard one to kind of prove until you see if it breaches here. I don't know. Maybe. Yeah, I don't know. This is a tougher one. May never break this line, you know? Like, it's possible this just advances, it comes back, jumps up quickly, and then comes back down and just takes off from here. I mean, it's a hard one because of I feel like they've already traded enough in this area, so I don't know if you would spend a lot of time here. So now I'm actually looking at this now. I'm like, why was I leaning towards that longer one? Maybe because of the head and shoulder. But really, it's something that could happen pretty quickly this year. So, yeah. So right now, I'm most concerned with what happens right around that marker I marked off at maybe about 380 if it gets there. And whether or not it kind of can hold that level and have continuation is pretty important. I think early rejection here would probably send you back down. And then you're just going to have to work it out. I think it would take longer. Wouldn't necessarily be bad all over. It'd just take a long time. And potentially dip through here a bit just to check levels. Yada, yada, yada. Yep, this is not a great place to be for AMC trader right now. You're kind of between two very polar opposite movements, and I think that the overall the concept of like sideways price action here shouldn't escape us. Like the possibilities of that shouldn't escape us, and I'm making it very definite. Like, oh, it has to be on Tuesday. It doesn't. I mean, in reality, we all know that if you wanted to waste time, you could have a really long, prolonged breakdown or a really long, prolonged breakout. So there's still a whole bunch of time that we could spend in this range if that's the desire. I think it's coming to a bit of a bottleneck, though. Like, we've hit these little decision points, and they have not proven to be very reliable, except for short term, because the stock keeps flip-flopping. It looks like a flag to me. In the case of a Wyckoff reversal, like there is one that's an ascending channel, but there's also an ascending channel that's just a redistribution. So that's not helpful, is it? You're really just kind of watching volume and just seeing what happens. So I'm a bit in the middle on this, and I'm not really feeling very bullish about it, to be frank. But I do think if it went bullish, I wouldn't be like super surprised. I'd just be like, okay. And I have targets in mind. I found the targets that I think are most likely, starting at like 7 and then 850 and 960. So assuming that you were able to move above this guy. Yeah. It's not, actually, it's kind of similar we just talked about on right over here, because like that patterning is actually the same. You see that? It's very, very timing wise different, but this is a very similar like patterning, right? You've got like an M with a lower push, and then the creek jump happens below, and then you get the move. Like there's the creek jump. So it's the waveform. It's kind of up, check support, down, cross the major creek, right? The trend, break out, and then you're back up, and then that wave is basically completed. And what you're waiting for is it going to continue or is it going to break back down? And it's really not that complicated of a question if you just want to boil it down to that. And if it did break down, where is it going to go? Well, it's probably going to go back to the last creek. I mean, it's usually that simple. It's going to come back to this guy. It's really the same thing on AMC. AMC's timing is just really different right now. You can see it. It's right there. You know, this is your waveform. Up, down, and then is it going to continue? So pretty simple. And if it doesn't, where are you going to go back to? You're probably going to go back to the creek, way down here, like 3. Same with HYMC. If he doesn't continue, you're probably going to go down the creek, way back down here. You know what I mean? It's like no different. It's just the AMC looks so severe on its move up. But both of them jumped local creeks. I mean, HYMC is a bit of a bigger one. And you just kind of got to watch the range and see how it finishes. It might take a little longer based on the size. But we'll see. Yeah. I wish I could tell you with absolute certainty, but I cannot. So I just can't. Yes, it will continue. There you go. Other people, you're more than welcome to be absolutely certain. I advise caution and just listening to other people, even listening to myself. I prefer to not be like that right now. I'd rather just be waiting for that moment. Yeah, those are valid things. I'm reading the comments. I mean, the GME 50 just crossed the 200. It would be really, really good. Last time 50 was over 200 on daily, it was in September of 2023. That's good to know. I need to do a longer term thing on GME. GME is kind of just butting its head up right now on this little tiny local bottom. If I'm going to call it a bottom, be so bold. I'm just kind of waiting. Sort of pinned. Maybe if it pushes here, we'll see it push up to 1830, and then if it can find support around 1830, I think you're going to head back up towards, I really do, I think you'll head back up towards near 20. I don't know if it's all going to happen today. It could kind of boil out to like a $19 mark today and then just take off on Tuesday. So anyways, it's time for me to get lunch, and I've got other stuff I want to get done today, so I'm going to go ahead and head out. I'm going to wish you guys a great long weekend, and I will do a recap. You know, I know that we want that, so I will do one this weekend for sure. I don't plan on streaming again. If there's some kind of a major move, I might come back in today. I might have time to do that, but don't count on it. If it's not something crazy, I'm probably not going to, so just so you know. I do really appreciate you guys coming out, sharing your thoughts with me, listening to me jabber about stuff. Maybe when I get off, we'll get a good little pop. It usually happens, right? So best of luck to everybody in the market. Hope you guys have a great long weekend. If you're in America, happy Memorial Day, if I can say that. Have a good Memorial Day. I should just say that. And we'll talk to you later.